So there is, before I start with our discussion, there is a small announcement from Board of Studies ICA. Faculty from Board of Studies would like to make small announcement. Swatiji, over to you.
Hello, good evening students. I am from Board of Studies. Hope you all are enjoying the sessions, these virtual classes. These are of great use to all of you. Students, I would like to make a request to you. Please fill the feedback form. Please share your feedback after each session. After taking all the virtual classes, each session of virtual classes, I would request you to fill the feedback form because your feedback is really very important for us. So that after knowing your feedback only, we will be able to serve you in a better manner. So hope you are enjoying the session, you are taking full use of it, and you will share your feedback at the end of each session. Thank you. Over to Sir.
Thank you, Swatiji. So friends, welcome back for today's evening discussion. We are going to discuss on paper 8, indirect tax laws. In that, chapter number 8, dealing with your input tax credit. So as I promised, today is our second session. First session we have discussed with our basics of input tax credit. So what we did, we have understood what is our input tax credit, how it works, what are the conditions prevailing in relation to section 16. So what we will do in today's session, we will start with a basic recap of section 16. What all conditions are there? We will have an overall glance through of this section 16. From there, we will move on to a couple of definitions which are very important under section 17. Then we will start with our discussion for today, that is on apportionment of credit and block credits. This is a hard-bone topic in our entire chapter number 8, which deals with your blocking of credits. Next, from there, we move on to our rules and regulations. In relation to section 37, there are rules, rule number 42, rule number 43. We will have a discussion on rule number 42 and rule number 43 to see and understand what is discussed in our section 17 and how does the mechanism of blocking of input tax credit happens by way of my rule 42 and rule 43. From there, we will have the last discussion for today. End of this session, what is our expectation and what is the learning. So as a professional, the future going to be qualified professional chartered accountant, once we get into the industry, what is there in for us as an expectation set from this particular chapter. So friends, let us start with our first thing. Like before I go on to my definitions, I'll spend a couple of minutes on my section 16, what we have discussed in our last session. This particular section 16, we have understood what is our input tax credit. When I say input tax credit, what are the definitions which are covered? What is to understand with our reverse charge mechanism? What is a reverse charge? When can I take an input tax credit on reverse charge? Section 16, subsection 1, we have understood which all scenario I can take my input tax credit. First, to start with, we have understood definition called business. There are a couple of areas which have covered under this definition of business, which was beginning point under section 16. So what they say, any inward supply of goods or services which are used or intended to be used in course or furtherance of business, I can take my input tax credit. So section 16 is a broader opening where it says anything you have procured for what used in the course of furtherance of business, you can take the input tax credit. That is what my beginning opening section 16 says. Thereby, we landed in section 16 subsection 2. This section 16 subsection 2 has got 4 subsections, or rather I would say 4 clauses, A, B, C, D. These 4 clauses along with the rules we have studied in our last session. So while reading this particular section 16 subsection 2, we have understood what do we mean by receipt of goods or services. What do we mean by making a payment to my supplier? What do we mean by these documents which are relevant for availing input tax credit? Finally, what is the time limit which has been set in relation to availment of input tax credit? We have picked up one particular example in relation to rule 36. Where we have extensively did permutations and combinations using one Excel file. Similar to our last session, friends, today's session also I have uploaded one Excel file along with this PPT which is posted on the website by Board of Studies. So my recommendation, please download that particular Excel file, keep it handy for doing couple of exercise in relation to the topics which we are going to discuss for today. And end of the last session, I have seen that couple of queries were raised by some of friends which I couldn't answer. I'll give a quick answer to those questions. One question came, can we expect the toughness in this question, especially rule 36? Probably examination point of view, that may not be so difficult. So my answer for that particular question is CA final examination. Always expect the unexpected questions to come through. A definition for India, if someone doesn't expect, it could be tested for 3 to 5 marks. Please be prepared for that definition. Also, one question came saying that, sir, what is the relevance of definitions? Again, it is very, very important for us to learn the definitions, because some of the theory and some of the case laws what we are going to solve are backed up by our definitions. So those definitions which are covered in your institute material at the beginning of the chapter, and whichever faculty is going to cover as the definitions relevant, my humble submission, those definitions need not be hearted, but at least learn the essence which is there in that particular definition. Today's session, when we walk through the few of definitions, you will understand why is that so important. Now, there is one question posted by Yogesh. So if seller booked to transporter and conditions is that seller will send goods to buyer, whether handover to transporter will consider as receipt of availment for ITC. Yogesh, this is in relation to section 2, clause A, which we have been talking the other day. Now his question is, seller who is selling the goods to the buyer, when he hands over the goods to the transporter, can we call that as a receipt in the hands of recipient for the purpose of availment of ITC? This is a question which was posted by Yogesh. So answer for that, Yogesh, depends on the commercial terms. I don't recollect that one of your friend has posted in the last session. Commercial terms, Incoterms, INCO, one of your friend has posted. So when we raise a tax invoice, on the tax invoice, is it compulsory to mention the terms of supply? CAF, FOB, X works, all these particular technical terms. I would say yes, this is very, very important for the transaction to establish where is the owners, where is the ownership getting transferred. In this case, Yogesh, if you say the goods are picked up at the doorstep of the supplier, and that point, the ownership from supplier gets passed on to the buyer, I would say yes, the term receipt of goods has met that condition at that particular stage. Continuing your question little further, Yogesh, what if I don't have intention to get those goods into my factory, rather I have intended to sell as it is to some other seller on the way in transit, bill to ship to model. Would it change its position the moment I do a sale in transit? Answer would be definitely no. The moment I have received the goods, that is my agent, transporter has received the goods, the way that I get my ownership, the same way in bill to ship model also, the ownership continues when I hand it over to my recipient. So it doesn't change its position and law remains as it is. And if I can establish as per my commercial terms that that means my transporter, my agent has received the goods and my Incoterms or X works supplier, then I would say I'm satisfied with my recipient terms of receipt and I can avail input tax credit. What is relevant for us? So as on 31st March, goods are not physically received at factory. Physically bill has been received, say electronically bill has been received. This document was signed electronically using a digital signature. Now I can account very well using that particular document. Now can I say I can account for purchase? I can also account for input tax credit on that. My answer would be yes. If my ownership, risk and rewards, everything was transferred from seller to my buyer, that is to me at that particular stage. Continuation to this argument. So what if in my books of accounts, when we prepare our books of accounts, in notes to accounts I have disclosed this is a value of purchases which is lying in my transit. Though I have not received, I have accounted and shown as my purchase. Will that alter, will that change my position of eligibility of input tax credit? Answer to that again, I would say it doesn't deter my entitlement of input tax credit. So friends, let us start with our today's discussion, section 17, which deals with your blockage of input tax credit. The heading says apportionment of credit and blocked credits. Costing, when I have a term called allocation, that is one technical term which is more or less equivalent to this term called apportionment, which is apportioning. A portion of my entire credit is blocked. So it talks about what is a portion of credit which is entitled for you. Now we will, when we walk through our provisions, we'll have a better clarity to understand this particular thing. First definition to start with, motor vehicle. This is one definition which is tested every now and then, especially from input tax entitlement. So for us, under GST law, section 2, subsection 76 has defined motor vehicle. This term motor vehicle have meaning assigned to it in as per the clause 228 of Motor Vehicles Act. So at times what happens, instead of me redefining the definition, let me just recollect to the original law. So if I refer to something called land, immovable property, instead of me defining what is an immovable property, something which was already defined in Transfer of Property Act, it is apt to refer to that particular thing. Another example, security. Instead of me defining what is an security, it is good to refer to Security Control Act, so that it will the wider definition which is getting amended every now and then gets reposed to my original law. Now when I look into my section 2228 of Motor Vehicle Act, it says my motor vehicle or vehicle means any mechanically propelled vehicle adapted for use upon roads, whether the power of propulsion is transmitted thereto from an external or internal source, and includes a chassis to which a body has not been attached and a trailer, but does not include a vehicle running upon fixed rails or a vehicle of a specified type adapted for use on only in factory or in any other enclosed premises, or a vehicle having less than 4 wheels fitted with engine capacity of not having 25 cubic centimeters, 25 cc. Precisely this particular definition says, look, motor vehicle is nothing but a vehicle. This vehicle has a capacity to mechanically run. Now when you see a bullock cart is not a mechanical vehicle because it doesn't have an engine. A vehicle which is running with a mechanically operated, there is a propulsion. That means there is a force, there is a torque force which is making the vehicle to run. So this torque force which is defined here called mechanically propelled. So if there is a vehicle without engine, I don't call that as a motor vehicle. This definition, friends, this we use somewhere in the forthcoming sessions. There is a topic called e-way bill. Please wait and watch for this definition, how we can use this particular thing when we talk about e-way bill. When I have a transaction where I carry my goods on a bullock cart, there is a transportation of goods. Whenever there is a transportation of goods, we refer to provisions called e-way bill. So if there is a vehicle movement of goods without a vehicle, without using a motor vehicle, then e-way bill may not be required. So this is, in that context, I have to look into this definition. Further to say, this says this is a motor vehicle which is designed for what purpose? For the purpose of carrying, which is designed to run on a road. So if you read the language, I have bolded, adapted for use upon roads. I have designed this motor vehicle for what? To run on road. A vehicle which is not run on road, can you call that as a motor vehicle? Though it has all the characteristics, but it is not designed to run on road, I don't call that as a motor vehicle. Example, that I have a forklift. Forklift is a machine which I use in a factory. I don't use it on a main road. I don't use it on the roads. I have designed, the main purpose of this vehicle is to run somewhere in a private place, not on a road. So the moment I refer to the road, which is in general common parlance, which is used at a public place. So it says whether the power of propulsion is transmitted thereto from an external or internal source. So whenever a vehicle is run, this vehicle is run with an external or internal source. That is something which is what referred to. So this particular term motor vehicle does not include what? It does not include what? A vehicle running upon fixed rails. So if I run a vehicle on a train or on rails, it is not to be called as a motor vehicle. Or a vehicle specifically adapted for use only in a factory or in any other closed premises. Now when we say closed premises, so there is a mining area. In a mining area, I have something called propeller, a crane which is used to dig mud. Can you call that as a motor vehicle? Friends, limited purpose, it says this definition motor vehicle does not include a vehicle which is used only in a factory or enclosed premises. That when you look into a machinery which is used for digging of mud, minerals, earth, that is one example where though it has got all the characteristics of a motor vehicle, for the limited purpose of this definition, it does not include my motor vehicle. Also it says any vehicle which is having less than 4 wheels, So if a vehicle has got 3 wheels, can I call that as a motor vehicle? Answer would be no. It is having a vehicle which is having 3 wheels, which is having a capacity of not exceeding 25 cubic centimeters, 25 cc. This is example for that is the small vehicles which are used in your go-karting or which is used by the kids at the home. Electrically propelled vehicle which is used in your domestic places. Usually the kids which is having a battery operated vehicle or which is precisely it is having a backup using a battery. Those are the vehicles which are covered under this particular definition called motor vehicle. Next. Now this term exempt supply, though we have covered in our previous session, I would like to spend once more revisit this term called exempt supply for the reason there is utmost importance when we come and read this particular definition called exempt supply. First and foremost, this term exempt supply, if I read the definition, it says exempt supply means supply of any goods or services or both which attracts nil rate of tax, wholly exempt from tax under section 11 or under section 6 and includes non-taxable supply. Last session we also have discussed something called non-taxable supply. What is non-taxable supply? When we have read section 9, there is something called excluded from a levy. As of now, what is excluded from my levy? Alcoholic liquor for human consumption, petrol and diesel. This is something which is excluded from a levy which is called non-taxable supply. So this is one particular definition which is important. For a moment, I will pause to check the questions which have been posted till now. Also, I would request all of you to be ready with an Excel file which I have shared it with you. Just give me a minute. Now quickly let me come to a couple of questions which have been posted. Sridhar says, transport services rendered to business entities are covered under RCM. Please explain the taxability of high charges payable by the transporter to a limited company. Whether levy is exempted or transporter can claim ITC for the GST paid on truck high charges. Sridhar, your question is actually a combination of multiple chapters. However, I'll clarify your question, Sridhar. For the benefit of others, I'll just explain the question what Sridhar has posted. Then I'll give you an answer for that. He says, transport services rendered to business entity. There is a corporate entity. For this corporate entity, say there is a Mr. X who has purchased a vehicle. This gentleman, Mr. X, has been tied up his vehicle with a corporate entity. I'll give a simple example. All of you are known with this entity called Apollo Pharmacy. Apollo Pharmacy, if you see the group of Apollo, there are hospitals and there are pharmacy and there is also a division called food division. So when I think of this example of Apollo, this Apollo Pharmacy is an entity. I, being an individual, I have a vehicle which is used for transportation of goods. I have got a contract with Apollo Pharmacy. What it says, from this point to this point, you pick the material from the central warehouse, you distribute at various branches. If there are any goods written from branches, you bring it back to the head office. This is a contract. Now, his question further says, this company, Apollo, is supposed to pay tax on reverse charge mechanism. Whether levy is exempted or transporter can claim ITC for GST paid on truck charges. Now, Sridhar says, so when I have attached my vehicle with this Apollo, first question, is there a levy on forward charge? Is there a levy on reverse charge? Answer to that question, Sridhar, my section 9, subsection 3, section 9, subsection 3, read with, there is a notification called 13 of 2017. Please make note in your working notes, section 9, subsection 3, hyphen, notification 13 of 2017. This notification read with one more notification 11 of 2017. So to answer this, my section 9 subsection 3, notification 11 of 2017, notification 13 of 2017. Combined reading of these three provisions, it says in relation to transport vehicle which is used for transportation purpose, if I call that as a GTA, I wouldn't call as a high charges. It is in relation to transportation of goods. Now there is a difference between hire and there is a difference between transportation. I'll explain both and I'll clarify both, Sridhar. So if I use this vehicle for picking from one point, delivery at one point, I call that as a transportation of goods. This notification 11 clarifies that the rate in that particular scenario is 5%, where service provider doesn't want to enjoy input tax credit. 12% is the rate of tax. 12% is the rate of tax if service provider would like to enjoy input tax credit. Now here, if the option of service provider not to register, not to enjoy input tax credit, then the rate of tax is 5%. Then my notification 13 of 2017 clearly says that if the transporter is not in a position to take input tax credit, service provider is not willing to take input tax credit, the levy is on reverse charge mechanism. So corporate company will pay tax at 5% for the reason service provider is not willing to take input tax credit. Now, what if my service provider is inclined to take input tax credit? Input tax credit, if you want to enjoy, the rate of tax defined is 12%. So I, being a truck owner, if I want to take the input tax credit on the vehicle purchase, 12% is my rate of tax. No RCM, it is on forward charge. This is my point in relation to classification as GTA. From there, I move on to something called high charges. So what is GTA? What is high charges? I take the responsibility of moving from one point to another point. I issue something called consignment note, a piece of paper which communicates from this point to this point I have delivered the goods, and for this moment this is my charges. That is called GTA. High charges is just an example. I give a vehicle with the driver, without driver. There are two classifications. You use this vehicle the way you want. You use it for 10 trips, you use it for 5 trips, you use it only for 1 trip. Rental, I am going to collect. So contract is something which comes into picture. So if I have contract for just letting out of a vehicle, then I call higher charges. In relation to high charges, the rate of tax is the tax which is applicable for the goods which is generally supplied. Depending on the CC capacity, 18% to 28% is the rate of tax. This is to your answer, Sridhar. Gigi Joes, a big question. Put it a little simple so that time gets saved, Gigi. Being a SEZ unit, company is availing refund of exports. If it is in relation to refund, Gigi, I would like to answer this little later. Reason, there is a lot more to cover. Please excuse me for refund case. Short questions, quickly I'll cover through. Dilip says, high C sales attract IGST. Answer, refer schedule 3. We have couple of problems. If you look into our Excel file, you will be getting to know. Meanwhile, I would request all of you to please put it on chat window. Are you ready with your Excel file? Hiba says, auto with three-wheeler is not a motor vehicle. Hiba, condition is, if you look into the definition, my motor vehicle, having it says vehicle of a special type adapted for use only in a factory or etc. Vehicle having less than 4 wheelers fitted with engine capacity of not exceeding 25 cc. All your auto 3-wheeler what you are seeing, Hiba, that is having close to 120 cc, Hiba. So I would say it is not fitting into that exclusion, Hiba. Again, Dilip says, if I go on to water park, roller in Disney park, etc., does this not cover the motor vehicles? Yes, Dilip. This is not meant to travel on roads, so it is not a motor vehicle. Answer to your question is that, Dilip. So this says, are vehicles used in airports not motor vehicles since they are used in enclosed area? Yes, Sudhir, your answer is right, because it is not meant to run on roads and it is used in a closed area, not a motor vehicle. Perfectly right, Sudhir. Dilip says, is there any difference between input on regular goods and input on capital goods? There is a difference, Dilip. Like capital goods, I should not have claimed depreciation on the tax portion. That is one mechanism which I treat. On inputs, it is generally used in my business, but for that there is no difference. Yeah. Jayesh says yes, ready. Sridhar says ready with Excel. Ravi, ready with Excel. Thanks for confirming. Akshara, good. Friends, so you're ready with your Excel. Now quickly, I'll come back to our. Yeah. In Excel, if you look at your example number A, please. I hope you are able to see my Excel file. In example A, I have given some scenarios. Nature of supply I have given, value I have given. I have given heading called taxable value, exempted value. What I would like to hear from you, for each particular entry, I hope you are able to see my Excel. See, I'll clarify first example. I would like to fill you the rest examples. First example, supply of rice for 100 tons to a merchant in Bihar. 80 tons having a brand and 20 tons without having a brand. Food items are exempted under notification 2 of 2017 other than goods sold under a brand, either registered or not. So here, this example, I would like you to help me out. There is a value of supply for 12 lakhs. This value, please bifurcate how much is taxable, how much is exempted. I'll just give an example. If I feel straight away 10 lakhs is taxable, I'll just put 10 lakhs over here. I'll put 10 lakhs over here, and balance exempted I'll put over here. So I'm just indicating this may be a right answer, may not be wrong, may not be right. I would like to read each of the situation, and please understand. We have read section 2, subsection 47, that is exempt supply. Exempt supply, reading that particular definition, what you understand out of the given value. If it is exempt supply, put it in exempt supply. If it is taxable, put it in taxable. End of this, we will see what is exempt supply, what is taxable supply. I'll wait for 1 minute to give you answer. Once you give the answers, once you start filling, you can see there is a formula updated here. You'll get the formula. I just want you to put whatever result you're going to put, get here in an exempt value. Please put into the chat window. After you do with your answer, done with your answer, whatever you get the result in column H5, please put it in the chat box. We will see, we will understand whether we are right or wrong. Then we'll get back to our discussion. I'll wait for you to answer back. Couple of inputs have come in the last session. Sir, it is good to work with Excel file, but unfortunately I would say examination we don't have Excel or Word in front of us. We have only a calculator, a working note, that is answer booklet, and a pen and pencil. So for convenience, I have given problems in Excel. My suggestion is you can either take a printout or solve at your end so that you get familiarity with solving. Ravi has given an answer. Exempt value is 2.4 lakh. Okay. Let us see, wait for another 3-4 answers, and we will quickly look into the answer, right answer. Ravi has given exempt value 2.4 lakh. Let us wait for another 1 or 2 answers, and then quickly we'll go back and check the right answer. Read carefully, understand your definition. 2 clause 47, where it has said nil rated, exempted, non-GST. This is what we have understood under section 2, subsection 47. Friends, whoever have finished, please put their answer so that we quickly will go back and check the right answer. Sridhar has given another answer. Sridhar says 59,90,000 and exempt value 59,90,000. Oh, good. There's a huge difference, Ravi. Ravi, you are saying only 2.4 lakh. I presume you have filled entire answers, Ravi. Please check once. Sridhar has given a value of 59,90,000. So what I'll do, I'll come back to my Excel, start examining the answer one by one. Okay. Now, first question, it says there is 100 tons which were supplied. The value for 100 tons is 12 lakhs. Out of this 100 tons, 80 tons have a brand and 20 tons does not have a brand. If you look into this notification 2 of 2017, generally rice food items are exempted under GST. Notification 2 of 2017. Notification 1 of 2017, which deals with your goods, rate for goods, any brand rate, there is a tax determined. So 80% is with brand, 20% is without brand. So straight away I'll say 80% is taxable. This into 80% taxable and this into 20% is non-taxable. So for first line, this is the answer. Probably you have to fill all other lines. For second, services is rendered to a SEZ unit without payment of taxes. Now when I have rendered services to SEZ unit, please write down in your working note, refer section 16 of IGST Act. Reason, I would say it is zero rated supply, but I would like to read and understand the provision for your better understanding of the law. Right now I would say this is a taxable event and it is not exempted under GST law. So my taxable value is 8 lakhs and exempt value is 0. Goods supplied to DRDO which are listed for nil rate of tax. Again, nil rate of tax falls in the definition of exempted value. So entire 5 lakhs comes over here. 0 taxable value. Services supplied in relation to transportation of goods as per the government's notification. Service recipient has to pay tax on receipt of such service. Now, first and foremost, is it exempted? Answer would be GTA is not an exempted activity. I would say rendering of goods transport agency, there is a rate 5% without input tax credit, 12% with input tax credit. There is no net rate, there is no exemption. Because there is no exemption, I would say it is taxable, and it is exempt column. I'll put 0. Supplied goods supplied to scientific research enjoy a special rate of 5% instead of regular rate of 18%. If a certificate from a scientist not below the rank of D category is available for its intended use. This is picked up from the example of ISRO. When we supply some goods to ISRO, there is no blanket exemption. Rather, I have to get a certificate from one of the scientists who's having a specific cadre. If I have that, the rate of tax from original 28 or 18 or 12 gets reduced to 5% rate of tax. So here again, it is not nil rated nor exempted. So I would say it is taxable and 0 in my exempted value. Income generated from securities. Now, income generated from securities. This particular moment, I would say there's one question from one of the friends who was asked in the last session. Sir, is it important for us to read the definitions? That particular question comes from here. When I read the definition of goods as you read through, it says goods exclude securities. When I read the definition of goods is something which is tangible, which excludes securities from its particular definition. The same way, when I read my definition of services, even that excludes this term called securities. So when you read the definition called section 2 subsection 52, every kind of movable property other than money and security. So goods are excluded securities. Same way when I say section 2 subsection 112, which deals with services. Services also exclude this particular term called my securities. Just give me a minute. Yeah, this term section 102 excludes this term called services. So it is neither goods, it is not services. Now exempted supply says supply of goods or services nil rated or exempted or non-GST supply. Can I call non-GST supply? It is neither goods nor services. So I cannot call a non-GST supply. So exempted value, I'll put 0. And for a limited understanding, I'll say it is taxable. Sale of immovable property. Again, if you look into the term 247, supply of goods or services, my immovable property is covered under Schedule 3, which says, Schedule 3 says, Schedule 3 include, it is neither supply of goods nor supply of services. So my immovable property, not a supply of goods, not a supply of services. It does not come into my exempt. For a limited understanding, I'll just put into my taxable value. As I say, forget your taxable value. My answer in my exempted value is 7,40,000. So for limited understanding, when I read my definition to subsection 47, exempted supply is very, very important for us to understand. So this particular example gives a clarity how we interpret various transactions, see whether it is an exempt supply or it is not an exempt supply. So friends, answer for this question is 7,40,000. Quickly, let me come back and check what is the answers others have given. Gigi has given 2.4 lakhs. Please check the answer the way we have gone through. Sanjana has given 2.4 lakh. Sanjana, 7.4 lakhs is the answer. I believe 5 lakhs is what you people have missed out. This 5 lakhs, there is a difference called nil rate of tax. 247 says where there is a rate of tax nil or exempted. By virtue of that, 5 lakhs to be included. Hopefully you got that reason why there is a difference. Sanjana, that is the difference what you have got. Srinivas says 1.24, not correct. Hiba Khan says 51,90,000. Akshay says 54,90,000. Most of you have got 54. Probably why you got 54,90,000, you would have included that 42 lakhs. If I include 42 lakhs, 49 lakhs is coming. Okay, I don't know. Immovable property shall not be included. Reason, it is neither a supply of goods nor supply of services. So for that reason, it is not an exempt supply. Please keep in mind. Examination, this is also tested. You may feel definition for exempt supply 247 is not that important. What if 5 marks question is tested on the basis of this definition called exempt supply? Very important. Reason, write down. Exempt supply covered under section 9, also covered under section 44. When you go to annual return, this definition is of very important. Sadian says, first answer only for, okay, yes Ravi, I noted your point. Dilip says 54.5 lakh, please check the answer Dilip, how we have calculated. Gigi says 7.4 lakh, yes Gigi, you are correct. Hiba says, exempt includes non-taxable supply, why securities and immovable property not taxable. Hiba, please understand, non-taxable supply is nothing but non-leviable. Non-taxable supply, if you look into the definition of non-taxable supply, it says supply of goods or services. Supply of goods or services. When I say supply, first and foremost, it should be either goods or it should be services. My term security is neither goods nor services. So when it is neither goods nor services, it doesn't come into this definition called non-taxable supply. Second, which are not leviable due to tax. Now when I say not leviable, only which is excluded in levy section. As of today, what is excluded when you read section 9? I believe you have not read section 9. My humble suggestion is, please open the Bear Act, read section 9 once. In section 9, they have excluded for the time being alcoholic liquor for human consumption, petrol and diesel as of now. For that reason, that alone gets into this definition called non-taxable supply. So for your question, Hiba, this is my answer. Anirban says, if income from securities sold is not goods per Goods Act, then why is taken in taxable value? Anirban, I say limited understanding for this moment, for this understanding, I have taken as taxable value. Even if you don't take in taxable value, absolutely not correct. And the reason we are discussing this problem is from 247. From that perspective, I have explained. Even if you don't put in taxable column, it is not important. To get better understanding, wait for another 30 minutes. We'll get more clarity on that. Sanjana says, I gave her, yeah, okay, Sanjana, I have noted that. Madhumita says 740 exempted service. You're right, Madhumita. Ravi says, explain below point come generated from security sold the sale of immobile property. Ravi, I have explained this when Hiba has raised that question. Hope that is clear. Hiba has come back again with one more question. If immobile property is not exempt, then why is it taxable when it is included in Schedule 3? Okay. Okay. I got your question. I'll do this way. Please look into my Excel. To avoid confusion, for a moment, I am removing 250. I am removing 42 lakhs. Why I have put? Actually, when we travel further for section 17, subsection 5, you will have a clarity. For removing all confusion, I said it is not taxable. I am saying it is not taxable. So please take it from me. My transaction security, it is not a taxable supply. My sale of immobile property, again, it is not a taxable supply. For the purpose of Schedule 3, my sale of immobile property is neither supply of goods nor supply of services. So to fill the answer, I would say 0 here, I would say 0 here. Entire confusion is taken over. So I believe my explanation and answer holds good at this stage. Now, what I'll do, I'll come back to my presentation. Iba, I hope I have clarified your question. Now, I'll come back to my presentation. Next definition. Turnover in state. Turnover in state. This is one definition very, very important for us again. Please write down section 2 within brackets 112 hyphen section. Where do we use this? Section 17, comma, rule 42, rule 43, comma, section 44, comma, rule 89. Please write again. Section 17, comma, rule 42, comma, rule 43, comma, section 44, comma, rule 89. Now, at this moment, even if you don't know, don't worry, please don't worry. Wherever when you go through, you will come back to this definition. Now, I'll not read the entire language, I'll explain you this way. Whenever we come across this term called turnover definition, I have given numbering. This turnover in a state is nothing but the turnover which is there in my financials. Now, this term says it means aggregate value of first taxable supply, aggregate value of exempt supply. Point number 2. So when I refer to taxable supply, that supply which is there in my profit and loss account, that supply which is sitting in my balance sheet, please understand this term turnover in state does not restrict to balance sheet or P&L account. It goes beyond P&L to balance sheet. Example, sir, I have received 1 lakh rupees as an advance from my customer. So what do you do? Sir, I am dealing with supply of services. I am an AMC contractor. I got a contract from January till March. This 1 lakh what I have received for the next financial year, 3 lakhs, 3 months I have booked as income, balance 9 months I have shown in my balance sheet. So any advances which I have parked in my balance sheet as current liability, that also is a supply. So when I look into this term called turnover, I don't restrict to profit and loss account. Rather, I also go to balance sheet to see, because when I refer to section 12, section 13, when we refer to section 12, time of supply for goods, time of supply for services, section 13, where advances are also subjected to time of supply. From that particular term, when I say the moment I issue an invoice in relation to advance, it is deemed that there is a supply happened. Explanation to section 12, explanation to section 13. For that purpose, taxable supply, also exempted supply. When I say exempt supply, also you should have in mind how we have to calculate something called exempt supply. So add taxable supply, I add exempt supply. Made within the state or made within the state, comma, export of goods or services. So is there a difference between exports? Is there a difference between exports? Probably yes. For present understanding, you understand that taxable supply I call as bucket 1, exempt supply call as bucket 2. Write down in your working note. Taxable supply bucket 1, exempt supply bucket 2, export of goods and services bucket 3, and interstate supplies bucket number 4. Now, is there a difference between taxable supply, interstate supply? This definition has been defined this way to call all this constitutes my turnover in a state. Sir, what if my taxable supply already included interstate supply? I would say don't worry. If it is included, then let it be there in bucket number 1. So for the purpose of understanding this definition, I would say look into the supplies called taxable supply, exempt supply, export supply, interstate supply. Now all this but excluding CGST, SGST, IGST. Now this is the definition for my turnover in state. Now this is something which is relevant. One example I have said where we will have a better understanding why we are looking into this term called turnover in state. Further, to move on, works contract. Now this is one definition probably at your examination stage, probably at your preparation stage, not that relevant, but once you get qualified and get into the industry, assuming you get into practice, you have a very bright future when you deal with indirect taxation, especially in relation to immovable properties. Person with a background of vetting of contracts, drafting of contracts, framing of tax planning in relation to immovable property, could be direct tax, could be indirect tax. Very, very bright future. For your examination point of view, let us just understand what is this works contract. Works contract means, I have to read to explain, means a contract for building. Contract, I have underlined the term called contract. A contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration or commissioning of an immovable property. All that what I have read, are in relation to an immovable property wherein transfer of property in goods, whether as goods or in some other form, is involved in the execution of such contract. So this, friends, refers to a contract which is precisely is in relation to an immovable property. This definition 13, I should have put on this alteration or commissioning. There was a typographical error. This term 13 should have been placed on alteration or commissioning. Now all these 13 clauses what we see, there is a minor variation. Building, construction. What is the difference? Building is where there is a building, there is a construction activity. So what is the difference? Not much. If you look into a contract, if you have given a contract of building, you have given a contract of construction. This is how the broader meaning was brought in this particular definition called works contract. For your examination purpose, career purpose, what you need to understand, any of these contracts, any of this activity which is spelled in a contract, which is in relation to an immovable property, that is called a works contract. So please understand, anything I have done in relation to immovable property, I call that as a works contract. When we take few examples, you have little clarity on this particular term. Moving further, my section 17 subsection 1, which talks about apportionment of credits and block credits. Friends, as I said about my section 16, which says eligibility of input tax credit. Similar lines, this section 17 very beautifully says goods and services are both used by the registered person, partly for the purpose of business and partly for other purpose. Now, definition of business, first session, input tax definition we have read. That definition of business, if we understand, if I purchase goods which are used in business section 2, subsection 17, partly for other purpose. Now, which is other than business is called other purpose. Now, what is included in other purpose? Not defined. Business, there is an exhaustive list. So, if I use in business, section 16 takes care of you. Other than business, partly for other purpose, other than business, I have used for my personal use. I have used for giving as a gift. I have not put to business use. I have just left as it is. The amount of credit shall be restricted to so much of input tax credit as is attributable to the purpose of business. So this definition says, wherever I have taken input tax credit, your credit is blocked, your credit is restricted only to the extent of business. Something which is other than business, it says restricted. So difference between section 16 and section 17, if I see, first subsection under section 16, first subsection under 17. First and foremost thing is reference to the term business. I should have an intention to use in business. 16 says you use in business, you are entitled for ITC. 17 says you are not used in business, there is a restriction of that credit. So it says my credit is restricted if it is not used in my business. Segregation of ITC on procurement. Now the point comes here relevant is, sir, when I account for the bill, At that point, should I identify, or after accounting for the bill, should I identify? So this usage, my ITC on procurement is identifiable at the stage of procurement, not identifiable readily at that stage of procurement. Now I have purchased, say I went to the business of manufacturing of bicycles. When I have procured some raw materials like steel, wheels and tubes, I use it for manufacturing activity. So in a month, I manufacture 1 lakh bicycles. Out of 1 lakh, say I give 1,000, out of 1 lakh, 1,000 bicycles are given as charity. Now, whenever I procure raw material, is it possible for me to identify both for business and not for business? Answer would be yes if it is identifiable, no if it is not identifiable. In case of bicycle, I am not in the position to identify. There my section 17(1) comes and says, look, you're partly not using for business. Then I'm restricting that credit. Whatever credit you have taken, to the extent you have used in business, enjoy. Not used, restrict that. That is what my section 17 says. My restriction is ab initio and not post facto. That means at the time of procurement, section 17, plain reading. If you know that at the time of procurement it is not meant for business, don't take. If you know that it is meant for business, please take it. This is what the plain reading of my section 17(1) I understand. Moving on further to section 17(2). Section 17(2) is very, very important. This is a point where entire your understanding of ineligibility or restriction comes into picture. Now, let me read the English and then explain what is there for us to understand. Where goods and services are both used by the registered person. Look at the term, used by the registered person. Now, in 16(1), if I say used or intended to be used, here used by the registered person, intended to be used is not a used by the registered person, partly for affecting taxable supplies, including zero rated supply. Now I have bolded something called including zero rated supply. This is what I was saying. Read section 16 of IGST Act to understand what is my zero rated supply. In our example, export of goods, I said it is zero rated supply. When I have been reading through one example, this turnover, zero rated supply, export of goods was shown separately, which is again called zero rated supply. Wherever they have used zero rated, you as a professional, please keep in back of mind when we get into the scheme of designing the chart of accounts, just don't get into the blind bifurcation. Sale of goods, sale of service, sale of goods with tax, sale of supply of services with tax. You have, to the extent possible, bifurcation. Supply within the state, supply outside the state, supply duty taxable, supply exempted, supply exports. This bifurcation, to the extent possible, bringing into your chart of accounts. That gives you clarity for your MIS, for your statutory reporting purpose. Now coming back to this definition, the goods or services are used by the registered person partly for taxable supply, including zero rated under this Act or IGST, and partly for affecting exempt supply. When I look into this term exempt supply, please keep in mind section 247 should be triggered. Under this Act, the amount of credit shall be restricted. Whatever credit I have taken is getting restricted to so much of input tax as is attributable to taxable supply, including zero rated. So what they're saying, I allow your input tax, I restrict your input tax. If I have taken 100%, I restrict your input tax only to the extent of taxable supply, including zero rated supply. So if there is anything beyond this border, I'm going to restrict your ITC. That is what it says. Restriction of ITC post utilization. At the moment of purchase, I may not know. Only at the time of consumption, I will get to know. That is what this we have to understand. Now, friends, when you read this definition theoretically, probably you will not appreciate. I will give a practical example to understand. Assume for a moment you are in the accounts department. You have received purchase bills for accounting purpose. Now, as I say, the business is into manufacturing of bicycles. Every month, I manufacture 1 lakh bicycles. Out of 1 lakh, 1,000 bicycles are given for testing purpose or for charity purpose. This is a business policy. Now, when you get a raw material, what is raw material? Purchase of steel, say 10 tons. On 10 tons purchase steel, assuming that this has a value of say 60 lakhs. On 60 lakhs, assuming I have paid 18% GST. Say, assuming it comes around, out of 60 lakhs, it comes around, say, 12.8 lakhs, just an assumption. 12 lakhs is my ITC. Now, as an accountant, I wouldn't be in a position to know this 12 lakhs, I'll enjoy 100% or I'll enjoy proportionately. Now, how do I know out of this 10 tons, how much I manufacture dutiable, how much I manufacture which is given as a sample or as a free of cost? Now, I wouldn't know. So that is the practical scenario which they are trying to explain here. When you look into your section 16.2, you identify the value of the credit which is eligible to taxable supply, eligible to zero rated supply. That is what section 16 subsection 2 says. Now also, what is that important for us? This tries to ask you to identify exempt supply. So when you look into your supply, identify that portion which is called exempt supply. So this is what section 16 subsection 2 says. Restriction of ITC, post-utilization, records to be maintained for supplies. Now here, what is relevant? Theoretically, it sounds good. Practically, I have to maintain books of accounts to know what is my procurement, BOQ, how many cages I have procured, how many cages I have manufactured. We have something called SION, S-I-O-N. Please write down SION, used in costing, used in your customs. Standard input-output norms. Now, this is one standard input-output norms fixed, used for fixing duty drawback. When we come to customs, probably you'll have a clarity. That SION is something I use when there is a departmental assessment. I'll ask if you're into manufacturing activity. Please explain what is your standard consumption, what is your output. If I buy 10 tons steel, out of 10 tons steel, you have a standard costing. Using that, how many bicycles you manufacture. If you say 1 lakh, your actual outcome is 1,20,000 or 80,000. The variance is something we analyze. That is again a point relevant for my ITC computation. Just why I'm talking all these things. Practically, when you get into corporate world, you have all these permutations and combinations. You need to think beyond theory what we are reading here. So I'll quickly check. Are there any questions till now what we have discussed to clarify? Gigi has a question. If all nil-rated sales are included in exempt supply, nil-rated, why separate disclosure of nil-rated exempt supply in GST returns? The YMEA scripts is a nil-rated or exempted. Gigi, I believe you're good. I appreciate your question, and it indicates your practical exposure in your internship. Very, very valid question. This disclosure, Gigi, for the purpose of calculation of ITC, whatever we are going to talk through, further slides with the examples, you'll have a better clarity. For others who have not understood Gigi question, he is asking, sir, when we file a return, we know that the supplies are exempt because it is a nil-rated supply. Why I should show that in my GST return? This is just to indicate when I want to do a calculation, a simple mathematical calculation. What is my turnover? Turnover taxable plus exempted. This gives me a turnover in state. So this will help me for the purpose of determining whether you are supposed to reverse ITC, have you reversed your ITC or not, for determining whether you are supposed to file your annual return, whether filed or not, for determining whether you are supposed to register, not register. Multiple factors are there. Also to determine whether you are under composition, you are not under composition. So from department point of view, there are multiple checklists. Probably if you sit on the other side of the desk, you'll have a better appreciation, Gigi. Hope I have answered your question. Hiba Khan says, yes, sir. Thanks. I have clarified your question, Hiba. Dilip says, normally when we say turnover, it means sale value. This is the point, Dilip, I was all along trying to stress. Normal tendency, common parlance, general parlance, turnover means the sale value. Blindly, we will go to the profit and loss and we check our turnover. My point here is don't look into that. I'll give an example. What if I have say 20,000 in relation to a particular consignment I have recovered from my supplier. I'll give a practical example. I'll give an example of entity to have a better appreciation. When I talk of Maruti, when I talk of Amar Raja batteries, when I talk of XCD batteries, when you walk into these big companies, you as a transporter, there are strict discipline norms. Very fundamental discipline is A vehicle which is carrying goods, either an empty vehicle or a loaded vehicle, should not exceed at any point in time beyond 20 kilometers per hour. Second, it should not jump the signal where there is a zebra crossing. Wherever there is a zebra crossing, if employee is passing through that zebra crossing, you should stop your vehicle. Let the employee pass through, then you have to travel through. Maruti is fantastic in terms of this discipline and culture. Say there is a transporter you have engaged who has got into this factory. He has violated a norm. He jumped beyond 30 kilometers, and there is a norm that if you have violated the norm, 20,000 is a penalty. Maruti levies a penalty of 20,000 on the supplier. Supplier in turn says to the transporter, look, you have entered into a contract where you comply with all the norms within the factory, either my factory or my customer factory. Now, what if this 20,000 I have paid to Maruti, I have in turn recovered from my transporter. I don't show as a miscellaneous income in P&L account. I show as a debit in the transportation charges. When I paid, I have debited my P&L account. When I have recovered, again I have shown as a debit side in my P&L account. So if there are any recoveries which are subjected to GST, I don't show on the credit side of P&L. You are taken for a task. This is the reason where I'm saying don't go only with your P&L account. Hope I have answered your question, Dilip. Again, Dilip has another question. Audio and PPT visible? You are not visible. Oh, okay. Sorry, I think something went wrong with my video. Now I have set my video. Then Mahendra says, okay, video is not visible. I have taken care of that. Mahendra, thanks for that. Gigi says, okay, he got his reply. Thanks, Gigi. I'll come back to my presentation. Now, continuing with section 17, subsection 2, we need to understand that it has an intention. It has an intention to block your input tax credit. Now, friends, as I said, section 16, I'm bringing only relevant provision. I'm not explaining entire provision. What is relevant from ITC, I'm just bringing into your understanding. When I look into this section 16, it says my zero rated supply is nothing but export of goods or services or both. Export of goods or services or both. Also, it says supply of goods or services to SEZ. Zero rated supply means following supplies of goods or services. Point number A. Export of goods or services. Point number B. Supply of goods or services to SEZ developer, SEZ unit. That's what it says. This subsection 2 is very, very important, which breaks entire our understanding. Now, when you read in between the lines, you understand, you appreciate the law. It says, subject to provisions of section 17.5, which you are going to deal with, credit of input tax may be availed for making zero rated supply. Notwithstanding such supply may be exempt supply. Look, this is one provision I want to draw your attention to. What it says, I'll give an example. So I'm into rice business. When I am dealing with rice is exempted. I'm not having any brand. I'm just a agriculturist. I have extended business called sale of business rice. I get registered under GST for the very simple reason, assuming I have a agriculture paddy fields, I also have a mill, I also sell rice, and in the process of my business there is a husk which is generated, which is taxable under GST. For a limited purpose, assuming I am registered under GST, and also I export rice out of India. Rice, it is exempted under notification 2 of 2017, exempted nil rated tax. When I look into definition 247, anything which is having a nil rated, rice nil rated, 247 comes in. The moment I say nil rated, the question input tax credit. Because you are using, you're buying goods which is having a nil rated of tax, my input tax is restricted under section 17, subsection 2. The previous slide, if you just go back to the previous slide, in my previous slide it says input tax is restricted only to the extent of taxable supply and zero rated supply. Now, for the moment, zero rated supply, sir, if I am exporting exempt supply, even then it is called zero rated supply. This definition, section 16, overrides my exempt notification and says the moment you export out of India, it is called zero rated supply. The moment it is zero rated supply, I can enjoy input tax credit. There is no restriction on input tax credit. So this is one beautiful definition we need to keep in mind. Examination, wait and watch. One question is for sure is going to be tested based on this particular term called zero rated supply. Now coming back to section 17 subsection 3. Be very attentive. Entire your problems are starting with this section, subsection 3. 17 subsection 3. Please make a working note wherever you feel relevant or comfortable. Very important. Pay attention. The value of exempt supply under subsection 2. When we read subsection 2, simple terms it says, look, you give me the list of supply. When you have given the list of supply, that list is nothing but supply of goods, supply of services. This list have into two buckets. Bucket 1 taxable, bucket 2 exempt. I repeat, my bucket number 1 taxable supply. That bucket number taxable includes zero rated. That is my bucket number 1. Bucket number 2 exempt supply. Now from that particular exempt supply, we are reading this particular subsection 3. The value of exempt supply under subsection 2 shall be such as may be prescribed, means you look into rules if there is anything to be included, and shall include, that means your exempt supply which is covered under section 2 subsection 47 plus shall include supply on which recipient is liable to pay tax on reverse charge basis. What it says, when you look into your bucket number 2, which is called as your exempt supply, that exempt supply also include supply on which recipient is liable to pay tax on reverse charge basis. Your example, first example, Ravi, I believe, he asked a question in relation to renting of a vehicle, GTA services. So what if I have a motor vehicle I have attached with a corporate for renting services? What if my service is on reverse charge mechanism? What if my services are RCM? That is one example. If I am a transporter, I am not registered under GST, I don't want to take any benefit of input tax credit, I am the person they are talking about. All my supply which are covered under reverse charge, supplies on which recipient is liable to pay reverse charge. So if I look into my supply, I have a generated list of supply. I am into business of this particular renting of using of motor vehicle. Let me take example of VRL so that you can correlate, all of you can correlate. In South India, there is one business entity called VRL. This entity called VRL, it is into transportation of passengers. This entity is into renting of vehicles on hire basis. It is also into business of carrying transportation of goods. There are three business vertical. Business vertical number 1, transportation of passengers. Vertical number 2, hiring of vehicles. Vertical number 3, transportation of goods on road. For a moment, assuming I want to maintain 3 different verticals, 3 different P&L for managerial control purpose. Vertical 1 taxable, vertical 2 taxable, vertical number 3 it is an RCM. For a limited moment, if VRL doesn't want to take ITC, it says I don't want to take ITC, and this was categorized under notification 1313 of 2017. Recipient of service has to pay tax on RCM. So from VRL perspective, when I calculate the definition of exempt supply, all that what we have understood with example A plus my entire turnover in vertical 3, shall be included for the purpose of exempt supply. So 17 subsection 3 says shall include supplies on which recipient is liable to pay tax. Though I am supplier, I have not opted to pay tax, my recipient is paying tax. That particular turnover, that particular supply shall be included in my definition called exempt supply. Transaction in security. Now this is what I was explaining in example number A, where they say my transaction in securities shall be added back notionally in this term called exempt supply. Friends, keep in mind, if at all, if there are a supply of securities, what is a security covered under Security Act? Your equity, debentures, preferential shares, rights equity, all those instruments which are traded, I call that as security. If I have a turnover from security, for the purpose of section 17 subsection 3, my exempt supply will be added with your security. Sale of land. Again, schedule 3, neither a supply of goods nor supply of services. Sir, when something is called neither supply of goods nor supply of services, why is it getting added? This is the definition under the Act. This is not a definition, this is the equation under the Act. So in this act, this says section 17.3, my exempt supply, when you are calculating that supply, please add RCM turnover, please add your transaction security, please add sale of land. Till now, three things they have guided us to add. And sale of building. Sale of building, this is actually, sale of building actually covered as per section schedule number 2. Friends, you have Bear Act with you. Go to schedule number 2, there entry number 5. Schedule number 2, if you go to entry number 5, it deals with, actually schedule number 2 deals with your classification of goods or services. That particular schedule in entry number 5, clause number 2, which deals with your construction activity. So all the construction activity, construction of a complex building, civil structure, part thereof, entire thing, wherever there is a construction activity, which is a deemed supply of service, that particular activity till non-receipt of completion certificate, that is called service. The moment once it is completion certificate is received, it is as good as building. So for your simple understanding, I would say, if I look into my profit and loss account, sale of land is there, where subjected to local revenue tax is there, please consider that. Sale of building is there, no GST is paid, no GST is paid. Blindly, if there is a sale of building, I have to add back for the purpose of my this particular exempt supply. That is what subsection 3 talks about. So starting point 247, what we have understood, list to be prescribed as per your rules. If there is a list that to be added. Third, your schedule 3, there are a couple of transactions. My transaction in land is covered under schedule 3, but still it is added back for the purpose of this definition. This is my 17.3. Hope you have cleared what I have to add in my 17.3. Now quickly let me see if there are any doubts in relation to 17 subsection 3 till now. If any doubts are there, I'll quickly take that, otherwise we'll go further. Okay, there are no doubts till now. I understand that discussion is getting little technical. People have already experienced with indirect taxation. You will not feel difficulty. People who are looking into IDT for the first time, probably you have little difficulty. Please go with me. Till now, whatever we have discussed, let me know if you have any doubts. Good. I have no fresh doubts, so I'll continue with my discussion. So now 17.3 has given a clarity. Boss, look into your exempt supply. When I say exempt supply, what you have understood in addition to that, 1, 2, 3, please add it. Now further, this is explanation which is there under section 17, which says, for the purpose of this subsection, the value of exempt supply shall not include the value of activities or transactions specified in schedule 3 except those specified in para 5 of said schedule. Now this is one another point. Examination, your questions are tested on this particular explanation. What it simple term says, when you look into your profit and loss account, when you look into your sale register, if there is a revenue which is covered under your schedule 3, that revenue under schedule 3, please don't include for the purpose of your exempt supply, except sale of land and building. What it says, I take your permission to include only that para 5. What is there in para 5? Sale of land, sale of building. But for that sale of land and building which is covered under para 5, rest all I'll exclude. That is what this particular explanation gives the clarity. For having better clarity, I'll give an example. High sea sale. So we all understand that there is a high sea sale. Before the goods land come to customer's frontier, I get into a contract. I transfer the title in the goods. The bill of entry is filed by the recipient. I call that as high sea sale. Will it be covered under Schedule 3? Answer is yes. Because it is covered under Schedule 3, then it will be out of my exempt supply. Another example, barring your lottery betting, etc., actionable claims. Actionable claims is covered again under Schedule 3. Then if there is a income by way of an actionable claim, again, it is covered under Schedule 3. Please don't include for the purpose of my exempt supply. So examination, definitely one adjustment of for 3 marks can be expected from this particular 17.3 exempt supply. They'll give you a list of transactions. We'll take an example, don't worry. Out of the list of transactions, I have to calculate what is my exempt supply, limited purpose of my section 17 subsection 3. Now, from section 17, now I have come to rule 42. Rule 42. Please make a note, though material is available, go with the flow. Please make a note so that this flow will help you to solve your problems. In my rule 43, it says, for the purpose of rule 42 and 43, it is hereby clarified that aggregate value of exempt supply shall exclude. Now, all along we have read what to be included. This particular explanation in rule 43 says, please exclude the below. What is that? Value of services by way of accepting deposits, extending loans or advances insofar as the consideration is represented by way of interest or discount. Now, when I look into my profit and loss account, there is an entry called interest on bank fixed deposits. There is an entry called bill discounting income. Bill discounting income. Again, friends, you are all in final stage. You have to be very, very strong with these elements. Bill discounting charges, interest income. So when there is an income which is booked by way of a discount or interest, that shall be excluded. When, except in case of a banking company, financial institution, including a NBFC. Please excuse me, I have to take a little hot something so that I can go with my flow. This particular explanation says, please exclude your interest income. Please exclude your discount income. Entity who is not a banking company, entity who is not a financial institution, entity who is not a NBFC. Barring these 3 entities, rest all when you look into your profit and loss account, when you look into your financials, if there is any supply by way of this interest or discount, that shall be excluded. That is what they're saying. Probably a couple of you might have a question, people are not into indirect taxation. Interest income, is it a service? Bill discounting, is it a service? That you say, anything in money is neither goods nor services. Security is neither goods nor services. But why you are saying interest on this security is a service? This is one big debate which is going in court of law. For the time being, let us understand this particular entry, interest income or discount. Notification 12 of 2017, there is a classification where they say any income which is generated by way of interest or discount in relation to exchange of deposits or extending loans, it is exempted. Though it is exempted, this is not having any harmful thing by way of ITC reversal. So it says, for the purpose of your turnover called exempt supply, please ignore. Though in your profit and loss account, there is an entry called bill discounting charges, entry called interest income. For the purpose of your calculation of exempt supply, this shall be excluded. This is what they say. Further, the value of supply of services by way of transportation of goods by vessel from customs clearance in India to place outside India. Mind you, this is one question. Like a tongue twister. This is mind twister in your examination. What is covered? Value of supply of services by way of transportation of goods by a vessel. It talks by a vessel, doesn't talk by air. Examination to confuse you, they'll say transportation of goods by air from the customs station of clearance in India to a place outside India. So what they're saying, if at all, if I'm at CHA, if I'm a shipping agent, I have a contract, I had tried up with this shipping people, shipping guys who own ship. Those guys do the transportation activity. On behalf of them, I act as an agent. I get into a contract for a company. I'll say, your goods from India, I'll give a delivery in Singapore. I'll give a delivery in Sri Lanka. I give a delivery in, say, Australia. By sea, if at all, if I have a revenue, this is a revenue which is exempted. By the way, it is not exempted. It is not taxable. It is not taxable. The value of supply of services, transportation from the custom station clearance in India to a place outside India. So if I recover, say, 50,000 as a freight charges from my customer, what I will do, I'll say from the factory till your doorstep of your customer, I get into the contract. I'll break that 50,000. How? From factory till the customs station, 10,000 is the freight charges. Any service rendered within India on Indian soil, taxable. I charge GST on 10,000. Rest 40,000, I would say, transportation charges from customs port till the place outside India. That is my transportation charges. That 40,000, friends, if I don't charge GST, it is not an exempt supply. Again, mind you, it is only by a vessel, not by air. So these two things are relevant. Examination, two adjustments can be expected from these two. Interest income, your bill discounting charges, transportation fee only by a vessel, not by air. Further, this chapter 5 has got an explanation which says, for the purpose of this chapter, the term capital goods shall include plant and machinery as defined in the expression 117. I'll do one thing. This particular definition, okay. Definition of capital goods and plant and machinery, we will skip for a moment. For determining the value of exempt supply as 17.3, this is something which is important. Recollect our first example, example A. The value of land and building shall be taken as the same adopted for the purpose of paying stamp duty. People who are expert in dealing with income tax, people who are expert in CII, doing cost inflation index, for them from GST law, this is one definition which is important. What it says for section 17 subsection 3, exempt supply, 247. To that I'm adding back security, I'm adding back land. Many of us asked a question, so when security is neither goods and services, why should I add? The example A, when I put into taxable column, only from this particular calculation, I have added back. What it says, when I look into exempt supply, for the purpose of section 17 subsection 3, my exempt supply shall be added with land or building. What value? The value which you have paid stamp duty. The value which you have offered for paying stamp duty. That is what they are saying. So if I have sold for 20 lakhs, my stamp duty was paid for 18 lakhs. I repeat, that I have received a consideration for 20 lakhs. I have paid stamp duty on 18 lakhs. What value I have to take? Answer is 18 lakhs. But practically it never happens. It never happens because in a sale deal, I'll say, what is the consideration received? If I have received 20 lakhs, I will pay stamp duty on 20 lakhs. Only theoretically you can ask, sir, stamp duty paid on 18 and 20 lakhs I have received. Theoretically it will happen, practically it will never happen. Another way, sir, what if I have received consideration of 18 lakhs but I have paid stamp duty on 20 lakhs? A true honest taxpayer, though the guidance value of the land is say 10,000 per square feet. I have purchased for 12,000 per square feet. Seller wanted to show only 10,000, but I, being a honest taxpayer, I'll offer entire 12,000 saying that, look, this is what white money I have paid and this is what I have purchased. Though guidance value is for 10,000, I'll pay stamp duty on 12,000. That is one example. I'll go with stamp duty. Second example, when you deal with securities, the value of security shall be treated as 1% of the sale value. When I do calculation of exempt supply, there is one example, friends, just keep in mind. Whenever there is a sale of security, I'll not take entire value of security, 1% of that sale value. It is not profit. Sir, I purchased for 3 lakhs, I've sold for 4 lakhs, like used vehicle. Should I consider only 1 lakh? Answer is no. Sale value of security. My 1% of sale value of security shall be considered as if the value of exempt supply. This is what there in our section 17 subsection 3. Now this is one slide, very, very important for your examination point of view. If you have understood this slide carefully, section 247 taken care, section 17 subsection 3 taken care, blindly, even at any point in time, any question is asked, you have an answer to solve. This is the slide which we have to understand. Patent rights, this is picked up from our guidance note, which is issued by ICA, which is used for members. All copyrights vest with ICA. For the purpose of teaching, I have picked up from the guidance note, which is issued by ICA for members. So this particular chart says, specially exempt supply. Exempt supply, normal exempt supply. First column, section 17.3. Second column, section 247. So my definition 247, second column. First column, section 17, subsection 3. So categorization. First is leviable to GST. So if at all there is a register, sales register, where I have taken all the list of transactions, I have bifurcated. One called leviable to GST, second called non-leviable to GST. So first I have come to leviable. In leviable to GST, taxable, exempted. Taxable, where tax is paid. Exempted, where though it is leviable, there is an exemption notification, nil rate of tax or zero rated. That is called tax exempted. Now, intaxable, again, intaxable, when I sell to a customer, I'll charge 18%. The same service, if I give it to SEZ, it is called zero rated. It is not covered for exempt supply, either under 73 or 247. Domestic, rate with credit, rate without credit. Rate with credit, answer is same. Rate without credit, this is very important for us to understand. As I say, example of your renting of motor vehicle. Sir, if I am into business of renting of motor vehicle or a GTA, sir, I am a GTA. All across, just keep in mind this example. Sir, I am a service provider, I am a GTA. I don't want to pay tax on reverse charge mechanism. Example of VRL. If I have one particular wing or one particular limb, that particular vertical, I don't want to pay tax on forward charge. My recipient has to pay tax on reverse charge. 17.3, please add it. For the purpose of 247, it is not to be included because rate of tax is fixed. Rate of tax is fixed. So this is what this year taxable supply says. For having clarity, refer to notification 11 of 2017. When you look into 11 of 2017, it says rate of tax is 5 without input tax credit. Below the chart definitions, it says to the extent of, for the limited purpose of this notification, wherever there is a rate prescribed, but with the condition input tax is not allowed, that shall be deemed to be an exempt supply. So for me, from VRL perspective, vertical 1, vertical 2, vertical 3. Vertical 1, I have paid tax, collected and paid tax. Vertical 2, I have collected and paid tax. Vertical 3, I have not paid tax. I have offered my recipient to pay the tax. So what will happen? My section 247 not to be considered. Section 17 subsection 3, that particular vertical turnover should be added back for exempt supply. This is what we need to keep in mind. Moving on, tax exempted. Why tax exempted? Nil rated or rate of tax is 0. Interest, now there was one clarification which is given on 13th up to 23rd January. As I say, interest income not to worry. Only income, what I have to worry is domestic. Wherever rate of tax is, wherever tax of rate is 0, the moment it is covered under section 247, it shall be covered by virtue of that clause in my 17 subsection 3. Now, second limb, if you see, non-leviable to GST. Sir, if there is a transaction which is covered under non-leviable section. Now that non-leviable section, if I say it is a 0 rated, the moment I say non-leviable, section 247 answer is met. 247 I'll say tick yes. But when I say 0 rated, I'll come back to my definition of 0 rated, the slide which I have read a while back ago. Subject to 17.5, CGST, the credit of ITC may be availed for making 0 rated supply, notwithstanding such supply may be an exempt supply. Though it is an exempt supply, the moment it is an 0 rated, the moment you say it is export, I'll not add for the purpose of 17.3. This line non-leviable to GST. Let me just note for the benefit of students. Examination, if you expect a question, this is one para, this is one para where you can expect one adjustment from examination. Friends, we are taking our final. We need to have a thorough clarity on our concepts. For that reason, this is one particular entry which is clear. Again, I repeat for benefit of you. When you look into the definition of section 16, zero rated, it clearly says, though it is exempt supply, the moment you export, I call as zero rated. The moment I say zero rated, it shall be added back to taxable supply. So I need not reverse ITC because section 16 clearly says because it is an export, I don't want to penalize for you to restrict your ITC. You can enjoy your ITC because I want to encourage my exports. That reason this particular slide is important for us. Moving on. Next slide. Sale of land we have discussed should be added back. Securities again to be added back. Sale of land reference to guidance value, that is stamp duty. Sale of securities 1% of the sale consideration. Supplies liable to payment of tax on RCM basis. Again, the moment it is covered under 247, it is covered by virtue of 17 subsection 3. The last four entries, central excise, state excise, VAT, GST. Now what it says, my aggregate turnover definition read with my 273, again explanation which is given in my rule 43. Simple terms, if you have any central excise paid, state excise duty paid, or central sales tax was paid, VAT was paid, that shall not form part of exempt supply. Keep in mind, as of today, sale of petrol, diesel, central government levies excise duty, state government also levies state excise duty. Alcoholic liquor for human consumption, only state excise is applicable. Your turbine fuel, air fuel, it is subjected to VAT law. Your interstate supply of fuel, interstate central sales tax is applicable. So if you have a business where you're having a petrol bunk, I'm a dealer selling petrol and diesel. I'm also selling engine oil. So if I have both the business, vertical number 1, only sale of fuel, petrol and diesel, non-leviable to GST. I also have a business vertical sale of engine oil. I'm a dealer of a Castrol or any other petroleum product. This engine oil which is used in the bikes, if I deal with that, I have a turnover of 5 crores. I also have a turnover of petrol and diesel. Any excise duty etc. paid, that shall not be added. When I say exempt supply, my turnover 247 petrol diesel turnover should be added. For the purpose of 17 subsection 3, that turnover shall exclude central excise paid under central government levy, state levy, state excise, alcoholic liquor for human consumption. All that four shall be excluded. This is one another point. You can wait and watch. For your examination point of view. Now, friends, before we take up an example, I just wanted to know you have any doubts on anything we have discussed till now. I'll quickly run through your queries, then I'll come back to our problem. Meanwhile, I'll request you all you be ready with your Excel file. We will solve example number B. Where was the last question? There is no name. There was one question, anonymous question. Any suggestions for a book on indirect tax by specific person? I would love to see your name and place from where you're posting. For people who are listening to me, I would say Institute material guidance note is the best material you can think of from your examination. Reason, though there are private authors in public books, I would say best efforts have been put into Institute material. Probably if I refer to any authors, or even if I happen to be an author, I would prefer my Institute material has given much more wider perspective or spectrum of understanding. So till you clear your final, I would say Institute material the best. So what if I clear my final? I would say Institute guidance note, I would say one of the best compilation. Lot of efforts have been put into. you take up any chapter, it has got notifications, circulars, and exemptions. All have been compiled. I would say that one of the best compendium you can refer to. Institute final material, the guidance note which is given for members. These two are the books you can refer to. Now, if you don't have any other questions, I'll come back to your Institute Excel problem. All of you, please let me know once you are ready with your example number B. Example number B. Example number B. Let me know once you are ready with your example number B. Once you confirm, I'll go with my example number B. This example B, like example A, I have given various transactions. Out of these various transactions, I want you to calculate, forget taxable value. I want to calculate my exempted value. Though it is a repetition, please do carefully. What is the exempted value? What is the exempted value under section 17.3? What is the value of exempt supply as per section 17.3? Whatever we have read till now, please do the calculation and tell me what is the value you derive for 17.3. I'll give you 1 minute. Please work out and let me know one by one. Already we have discussed partially. The last two limbs you have to calculate. I'll wait for your answer. Once you're done with your answer, then I'll examine what is the right answer. Do this example B and let me know what is the value you get here in column G, row number 5, G5. Please make an attempt, right or wrong. Check your fundamentals. Always good to test your fundamentals. No one is looking at you. So whatever question you have, please get it clarified. Let me wait for the first answer. Let me wait for the first answer. First answer. I'm not able to say any answer. Hope you are able to follow with me. If you have any difficulty, please let me know. If the topic is getting too complicated, let me know. I'll make it a little more simple to make you understand. Friends, hope you are there with me. I'm not able to see any chats. There is no answer till now. Please let me know. Are you able to follow this discussion? Okay. I haven't got any answer. Let me solve it for you so that let me see. Now, exempt value, as we have discussed in the first problem, 80% of products is sold with a brand, 20% is sold without a brand. So, I'm not interested with taxable, I'm interested with the exempted value. So, this into 20% is my exempted turnover in example number 1. Services attracting nil rate of tax. of a tax rendered to SEZ without payment of taxes. As we have understood, anything rendered to any services which are rendered to SEZ, section 16 clearly says that though it is exempt supply, input tax shall not be restricted. So entire 8 lakhs will be called as a taxable supply. My for example number 2, taxable value is entire 8 lakhs and exempt value is 0. Then question number 3. High C sales for the sum of rupees 20 lakhs to a customer located in Dehradun. CAF value as per the Customs Act is 23 lakh 50,000. Now, CAF is just customs notional value, just to deviate from the concept. Now, when I see high C sale, this is a Schedule 3 transaction. Schedule 3, neither a supply of goods nor supply of services. So, it is not covered for the purpose of my exempt supply. Next. Services are supplied in relation to transportation of goods. As per the government notification, service recipient has to pay tax on receipt of such service. Now we understood that 17.3, any turnover is there on which I don't pay the tax, rather my recipient is paying, then that shall be construed as exempt supply for the purpose of section 17 subsection 3. Now next further. Goods supplied to a scientific research enjoy a special rate of 5% instead of regular rate of 12%. Okay, now this we have discussed that there is a rate of tax specified, neither a nil rate of tax nor a zero rate of tax is 0. So here also I would say exempted value is 0. Income generated from sale of securities. As we understood, income generated, now assuming that this is a sale value, 1% of this is my consideration. This 250,000 into 1%. This is going to be my exempt value for the purpose of 17.3. Sale of immovable property for a sum of rupees 38 lakhs. However, stamp duty has been paid on 40 lakhs. Now, this is the case I was talking. I have paid money of 38 lakhs, but I got registered for 40 lakhs. Probably I have paid in cash, which was not shown officially. As per the guidance value, as per the municipal value, I have paid the guidance, this one. So for the purpose of my exempt supply, 40 lakhs happens to be my exempt supply. Interest income. Now, when I refer to my rule 43, there are two things which they say, please exclude for the purpose of exempt supply. One is your interest income or your discount activity. So, interest income and discount is something which is excluded under rule 43. Rule 43. And apart from that, rule 43, what is the second item? Value of transportation by way of a vessel. So these are the three things. These are the two things which are excluded. So what we will do, this particular activity, I would say 0, because as per rule 43, this should not be considered. So my answer for example number B is 44,92,500. 44,92,500. Now let me quickly come to the question window just to see if there is an answer or any queries. Okay. Till now there are no answers nor any questions raised on this particular thing. We'll do one thing. We will take a quick break of say 5 minutes and we will resume back. We'll have a break of 5 minutes and we will resume back. Jay, we'll have a break of 5 minutes. For example number B, the answer is 44,92,500. Now, I haven't seen any of the answers from any of you. I presume that you have been working on the problems, and whatever concepts we have discussed till now is clear to go ahead. I'll continue further on 17. Now, this particular provision, section 17, subsection 4, this is very specific to the banking sector, banking institutions, non-bank, NBFC, or a financial institution. There are multiple transactions, and very tough to keep a track on eligibility and the nature of business, what is there. So for that, the law was very, very simplified. They gave a choice. Look, you get into the regular practice of section 17, 1, 2, 3, what we have discussed now. If you feel that it is cumbersome because banking, accounting, and other transactions are so complicated, so they have given a simplified version under section 17, subsection 4. Let us understand that. So any transactions which are done by a bank or a financial institution or an NBFC, what they say, you follow either subsection 2 or every month an amount equal to 50% of the eligible input tax. When you have list of your purchases, inputs, input services, capital goods, only those which are eligible. When I say eligible, section 16 subsection 1 comes into picture. Only to the extent of your eligible credit, you take input tax. How? 50% you take. What will happen to the balance? The rest shall lapse. So this is a very, very simple equation they have given in relation to a banking entity. So what they're saying, whatever you procure, first and foremost you check, is it in relation to business? Answer is yes, take 50%. If it is not in relation to business, then entire thing shall be cost you. Provided that option 1's exercise shall not be withdrawn during the remaining part of the year. 100% of these organizations got into this mechanism, which is a clear-cut and simple mechanism for the banks to follow. So this law provision says that, look, once you get into this 50% rule, you cannot opt out of this rule and get into 72 in between the year. Further, provided further restriction of 50%, it says restriction of 50% shall not apply to the tax paid on supplies made by one registered person to another registered person having same PAN. Now this is nothing but all your inter-unit transactions. So from one unit to another unit, one unit to another, one branch to another branch, one street to another branch. If I have raised an invoice, 50% restriction is not there, 100%. One unit raises tax invoice, another unit is going to receive the input tax credit. So exception to my section 17 subsection 4 is inter-unit transactions alone, I can take 100%. If it is a direct purchase from a third party, 50%. If it is used other than business, 0. This is a simple equation which is given under section 17 subsection 4. Now quickly what we will do, I have set one example called example C. If you come to my Excel file, there is a example sheet name called example C. This example C has got a clarity, has got example which is covered from this particular perspective. Now there is one question from Harsh Maheshwari, asking beyond the perspective of examination, practical life point of view. Harsh Maheshwari, I would say, reading our institute guidance note with your Bare Act, that is one thing which is very helpful because we learn from practice day in day out. Guidance note is one material which is good enough, Maheshwari. I don't see any other questions. Now we will come back to our example number C. People, please post onto the window box whether you are able to follow, because I don't see any queries or answers so far. Hope we are connected and you are following the discussion. Now coming to example number C, this is set in the backdrop of my section 17 subsection 4. For a banking company. For a banking company, this is an example. So here, first example, purchase of capital goods for networking. So in GST paid is 34 lakhs. So if I paid GST of 34 lakhs used in my business purpose, so my ITC is 15%. Next. Receipt of services in relation to audit of various branches. Again, Audit is something which is essential. They have revenue RBI audit, they have statutory audit, they have concurrent audit, they have electronic audit. So there are various audits. Because it is used in relation to business, again 50% of the ITC is eligible. Services received from another branch located in Haryana. Now, as I said, having same PAN from Haryana, say to Tamil Nadu, I have received the service, I can enjoy 100% as ITC. So in this question, lapse is 0. Purchase of office stationery for entire state. Now again, used for my business purpose, I'll say 50% is available. Next, last question. Purchase of solar panels for 5 crores, which are procured for donations to various government schools and colleges. Now, it is not meant for business. It is meant other than business. The moment I give as free of cost, it is not in relation to business. So I would say 0. This is my ITC computation in relation to section 17, subsection 4. So the answer for this problem is 66,75,000. This is my answer for 17.4. Quickly, I'll come back to my PowerPoint presentation. Yeah. Now, we will continue with section 17, subsection 5. 17.3, it just talked about what is your ITC credit, what is your restriction, and also it also talked about what is a exempt supply, what all things we have to consider for the purpose of exempt supply. That is there in your section 17, subsection 3. Coming to 17.5. Now, this is one section where entire your audit, entire your skill set, most of the questions which are raised by client, when you go for a statutory audit, when you go for internal audit, this is one slides which we are by and large focusing on, where we will say input tax is eligible or not. What it says, notwithstanding anything contained in section 16.1 or 18.1. Section 16 and section 18, these are two sections which are set in different backdrop, which talks about when I can take an input tax credit. 18, moving from composition to regular, or I am into a business where all along the goods are exempted. All of a sudden government notification says it is taxable. Now that is one notification which is covered under section 18. So if at all I am eligible under section 16 or eligible under section 18, notwithstanding that provision, means I set aside your eligibility. This is what 17.5 says. My input tax credit shall not be available in respect to the following. Now, when I say input tax credit, this includes your what you call inputs, capital goods, input services. All of them are included here in this particular input service definition. Coming back, yeah. First, to start with motor vehicle, we have read first slide definition, motor vehicle. So my restriction, motor vehicle for transportation of persons. If I have used a motor vehicle in my business, either on own or on a hire basis, for transportation of persons, that is for employees transportation purpose, or any of the guest transportation. So if at all there is a motor vehicle used in my business for transportation purpose, which has got an approved seating capacity up to 13, then when they are used for making the following taxable supplies, namely for other than A, B, C. Now I'll come to the first entry. If I use a motor vehicle in my business which is having a seating capacity less than or equivalent to 13, ITC is not allowed. So what if seating capacity is more than 13? Sir, I have a Swaraj Mazda which has got a seating capacity of 20. Can I take input tax credit? Answer is yes. Sir, what if I have a TT which has got a seating capacity of 13? Answer is no. Your IT is restricted. Sir, when can I take input tax credit? When can I take input tax credit? This points A, B, C explains. When I am into the business of supply of motor vehicle, I buy and sell, then I can take ITC. Transportation of passenger, I am like VRL. I do the transportation activity, I can take the ITC. Imparting training skills, if I am into run a driving school, then I can take ITC. That is what it says. Vessels, if you are having a vessel, you cannot take ITC unless you are into making a supply of vessel, transportation of passenger, or importing of training skills, or used for flying of aircraft. Only for these cases, your vessels related ITC is available. Also, it says transportation of goods, you can take your ITC. Further, it says I can not take ITC on general insurance, service, repair, maintenance in relation to motor vehicle. I can take only when I use it for further resale. I'm into transportation of passenger. I'm at driving school. Only then any repair expenses incurred in a motor vehicle, I can take my ITC. Otherwise, ITC is not eligible. Now, this is next entry, which is important for us to understand. I think once. Okay. Yeah. Section 17, subsection 5, clause B. Now, this is one exhaustive list. This is one exhaustive list. When we go for an audit, most of the time, our clients or we raise an objection in the process of our audit. So here, there is a list of inputs or input services where they say ITC is not allowed. What is that? First item. It says food and beverage, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing activity, renting of motor vehicle, hiring of renting or hiring of motor vehicle, vessels or aircraft, referred to in clause AA, except when used for the purpose specified therein. Life insurance and health insurance. So by and large, these items I cannot take ITC. Sir, I have a canteen, I have a factory. In my factory, I have a canteen facility. I provide food to my employees. Can I take ITC? This particular entry clearly says that no, you cannot take ITC on food and beverage. Outdoor catering, no. Sir, I have taken insurance for employees. I have taken health insurance. COVID, I have taken a health insurance. Can I take the input tax credit? Now, friends, one amendment is there in relation to this ITC, which is not actually amendment in the GST law. There was one notification by Minister of Health and Affairs, where they have released the guidelines for operational manual. During lockdown, they have opened various industries in a phased manner. In the process of opening up the industry, they have set a guidance manual how you have to run your business. One of the conditions they have set is, when you have opened your factory, please ensure that there is a medical insurance coverage which is having covered under COVID, which is a compulsory norm to open my factory during the process of lockdown. So any person who has paid insurance premium for the purpose of employee medical insurance, which is covered as per the directions of the Minister of Health Affairs, disaster management, then as per those guiding principles, I am eligible for ITC. There's one provision which says, provided that input tax credit in respect of such goods or services above shall be available where inward supply of such goods is used by the person for making outward supply of the same category as a mixed supply or as a composite supply. Now it says, look, I have restricted ITC on outdoor catering. I have restricted ITC on renting or hiring of a motor vehicle. But this you can entitle when you use it for further business purpose. I'll give an example. Sir, I'm into event management business. There is a one event which is conducted by Sony Television. For hosting this particular event, there's one of the celebrity from Bollywood who has to be there to be act as a host. I have engaged the contract of this celebrity taking care of everything. I do flight tickets booking, I do hotel booking, I do arrangement of a car, I do arrangement of a food, I do arrangement of a beauty treatment. Everything in relation to this celebrity, I take care. Now what I do as a bundle, I bill it to Sony Television saying that the cost of celebrity management is 20 lakhs just for a show. Now this 20 lakhs includes his air flight, his local cab taxi, his accommodation, food, beauty treatment, etc. Now all this 20 lakhs when I have billed to Sony Television. Now 17.5 says you cannot take ITC, but when you read this proviso, it clearly says that you have used that particular goods or services for making an outward supply in the same form or as a composite supply. You have mixed together to make a mixed supply or as a composite supply. So when you have used in your business for making an outward supply, then this provision says that you can take the ITC for that. Friends, 17.5 clearly says that you can take input tax credit when you have used that for making an outward supply. If not, you're not entitled for ITC. This is what we need to understand. There's one comment saying that sir, video is not visible. Mahinder says video is not visible. I think video is visible, Mahinder. Please check once. Yeah. Now, further it says any services in relation to membership fee, health and fitness center, travel benefits extended to employees on leave. This is ineligible for input tax. The last provision says where it is an obligation from an employer to provide that. If there is a compulsory obligation by the employer to provide any of those services, 1, 2, 3, then there is no restriction in ITC. Jay, can you check whether this session is going on live? I'm not getting any questions from the participants. Jay, are you there? Jay, are you there? I'll pause the session for a minute. Excuse me for that. Jay, are you there? Mr. Jay? Yeah. Sorry, friends. I'm back. I just wanted to reconfirm with the technical wing to ensure that the session is going on live. Okay, I'll come back to our discussion. Yeah. So this particular section 17.5, this clause 1, 2, 3 says, look, I don't restrict your ITC if it is an obligatory for an employer to provide that. I was talking about medical insurance. When there is a COVID manual, in the process of COVID manual, they have set a norm saying that it is compulsory to have a medical insurance, health insurance for employees who are working in a factory. When there is a direction from the ministry or any of the local authorities, then it is eligible ITC. So though there is a restriction because of government mandatory, I can take input tax credit of that particular payments. Further, now this is the crux of your works contract, where section 17.5 clause C talks about works contract service. Jay, is the session live, Jay? Yeah. Okay, I'm not able to see any of the questions for last half an hour. That was the reason I want to cross check. Okay. Yeah. Okay. MP, there is a confirmation that we can hear. Thanks for confirmation. I'll stand by. Yeah. Thanks, Jay. No, Jay. Okay. Just a minute, Jay. Please tell me, Jay. Okay. 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 Done, Jay. Yeah. 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 Friends, thanks for confirmation. There's MP has confirmed that you can hear you. Yeah, I'll come back to our discussion. Yeah. So works contract, first and foremost thing is in relation to works contract service. It says when supplied for construction of an immovable property, except where it is an input service for further supply. Example, sir, I have a building. I use this works contract for the purpose of my building renovation. Is it restricted? Now, works contract service, first definition when we read section 112, it clearly says that there are 13 activities which are all covered under the works contract. So, works contract is restricted in a 75, where if you see that blue color, except for supply of works contract service, except where it is input service for further supply of works contract. So, if I use that particular service for further supply, I am a contractor, I am a subcontractor. I got a contract from a company. In turn, I gave a contract to a subcontractor. So when the subcontractor bills on me and I bill on the company, I being the main contractor, I can take the ITC. That is what it says. Also, there's one term which I have underlined. When supplied for construction, this is one term which says construction. They have given a definition which says that if you read the explanation, for the purpose of clause C and D, the expression construction includes reconstruction, renovation, addition, alterations or repairs to the extent of capitalization, to the said immovable property. That means to say, friends, when I have incurred something on works contract, to the extent I have capitalized, ITC is not available. If I have not capitalized, ITC is available. So this clause C clearly says that if I have not capitalized this works contract in my books of accounts, you can take the ITC. So what is an example for this capitalization works contract service? You have this what you call entire renovation of a particular building. There is one particular building where which is old outfit. I want to have a new outfit. I have given complete composite contract where that fellow brings paint, he'll bring light fittings, he'll bring everything. It's a composite contract for renovation, not purchase of any fitments. I call that as a service. It is work contract service for renovation. I've spent huge amount of say 25 lakhs. Now that is not a small amount which I can hit into P&L as a revenue expense. I'll capitalize by virtue of my accounting provisions. Now this particular provision, this particular entry says when you have capitalized in your books of accounts, then ITC is not available. So what if I have not capitalized? I have hit to P&L. Then answer would be yes, you can take the ITC. Now, second provision, 5D. Goods and services both received by a taxable person for construction of an immovable property other than plant and machinery. Now, this provision says, sir, I have purchased goods and services for construction. I take example, I have a hotel. I want to construct rooms on my own. I have engaged a temporary labor. I have purchased steel, cement. As per my taste, I am getting the construction activity done. Purchase of steel, cement, iron and other things in relation to construction, I cannot take ITC. That if it is done for a temporary repairs, small wall is there, I have to get it repaired. A window should be there. So I broke a wall, fitted a window. There is money spent for 20,000. I don't capitalize in P&L. I put into P&L as a repair and maintenance. Answer is take ITC because this restriction says only for construction. Again, when I say construction, to the extent capitalization. If I have not capitalized, there is no restriction. You can very well take your ITC. Next, clause A says goods and services which is being paid under section 10. That is composition. Composition dealer never charges tax to you. So there is no restriction for that. Entry is there. We need to read for the law purpose. Clause F says goods and services are both received by a NRTP except imported by him. Now, what is an NRTP? NRTP is a person who has come all the way from a foreign nation to the Indian soil for doing a business. When he does a business, when he is coming to India, when he has imported goods into India, then those goods he can take ITC. Other than that, locally when he purchases goods and services, then he cannot take ITC. That is what this provision says. Next, goods and services for personal consumption. In the process of business, as a proprietor, I use partly for business purpose, partly for personal. As a universal principle, you cannot take ITC for that. Clause H is one clause. By and large, when we do statutory audit, internal audit, we use this particular provision. Goods lost, stolen, destroyed, written off or disposed of by way of gift or free sample. Now, goods lost, stolen, destroyed, which is written off, then ITC needs to be blocked, restricted. Goods disposed of by way of gift or free sample. So anything which I have given as sample, which is given as gift, I cannot take ITC. Examination, you can expect many questions from this particular entry. I'll give one example. On 31st March 2020, there is a provision made, total inventory value of 1.8 crore. On 1.8 crore, provision made for 20 lakhs. Should I need to reverse ITC? Can someone put into the window chat box? I repeat my question. There is a closing stock of 1.8 crore. On 31st March, there is an inventory provision made for 20 lakhs. Should I need to reverse ITC on that 20 lakhs? What would be your answer? Should I need to reverse ITC on 20 lakhs? If yes, why? If no, why? What would be your answer? Okay. This particular transaction, when I have made a provision, this provision is just for recognizing the diminution value. This is not a write-off. My GST law says, only when there is a write-off, I need to reverse my ITC, or there is a restriction of ITC. Then there is no write-off. Definitely there is no necessity to reverse my ITC. I think there is a technical issue with the ICA portal. None of the questions and none of the answers being posted by you are visible at my end. I don't know whether there is any technical issue. I'll ask the technical team to check on this. But meanwhile, if there are any questions which I am not able to answer, I'll take the stock of the questions and I'll get back to you in the next session. Some reason I'm not able to find any of your questions or answers which are getting populated. So you keep posting your questions. I'll take up all those things in the next session. Next. Any tax paid in accordance with the provisions of section 74, 129, 30. Now, this is one provision which is connected with your assessment provisions. Probably 3-4 sessions later, when we come to assessment provisions, wait and watch, we are going to cover with this provision in detail. As of now, understand, if there is an order which is issued under 74, 129, 130, where the backdrop behind the order is intention to evade payment of tax or misstatement, oppression of facts. If any of these three aspects are there, then my ITC is restricted under this particular section 17, subsection 5. This particular explanation says, when you look into your chapter, which is dealing with your input tax, the expression plant and machinery means the plant and machinery means apparatus, equipment, machinery. When fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and includes foundation, structural supports, but excludes land and building, civil structure, telecommunication tower, pipelines laid outside the factory. Examination 17.5. They can ask you, examine the eligibility of input tax credit in relation to telecommunication, in relation to pipelines laid outside the factory. So the answer would be if I have used something for telecommunication towers, they say it is not a plant and machinery, it is a building, civil structure, ITC is not available. Again, if there are any pipeline for laying of gas or fuel outside the factory, within the factory, no issue. If a pipeline or pipelines are laid outside the factory, then say it is not a plant and machinery, it is a immovable property, then ITC is not eligible. So examination, this is one provision you can expect a question from. Now, this provision, this is one of the amendment which has taken a major amendment. Somewhere in April 2020, sorry, March 2020, there was one notification where computation of ITC under Rule 42, Rule 43, which went little change. Examination point of view, this is one aspect we need to check carefully. Ambika, I can see only last entry which you have typed. Query is not reaching you. Ambika, I don't know whether you have posted answers or you have posted any of the questions. What I could say is I can just read one entry called Sir, query is not reaching you. That is what I feel, Ambika. There's some technical issue which is happening. I can just read your last entry saying that query is not reaching you. Definitely something is wrong with this thing. Just give me a minute. Let me have a word with the institute and get back to you. Just give me a minute. Okay. I think something is wrong, Ambika. Now I can see one question posted by Sapan. Suppose we construct a road in other person's land for the purpose of running our vehicle in relation to furtherance of business, then whether ITC can be taken. Sapan, this is in, I would say, look, 17.5 talks about your works contract. Anything which is done in relation to immovable property, it is not entitled for input tax credit. Land, building, etc., which is covered under works contract, it is done by you, it is done by a third party, then it is not eligible for ITC. Hope I have answered your question, Sapan. I can see only one entry of Ambika which was posted, and yes, Jay, questions are not coming from students' end. Now it is coming. All along, questions are not coming from the students' end. Can you ask someone from the institute end to check why it's what is happening? None of the questions. Got it, Jay. Thanks. Okay. Yeah. So friends, coming back, this is one equation. Section 17.5, Rule 42. Please follow with me carefully. Very important from your examination point of view. Two major changes happened. That could be the reason why one question can be expected from this particular area. Rule 42 talks about two aspects. First, you identify what is your turnover called taxable, what is your turnover called exempt supply. Having identified, now you do the test of your input tax credit. What is your test of input tax credit? See whether this ITC can be identified at accounting stage. Eligible for credit, not eligible for credit. Eligible for credit, partially. Eligible for credit, 100%. Now all these are the things which they have asked us to identify. Now that is the basis this particular slide has been set. So Rule 42 says my total input tax credit, I'll call as T. What is your T? I have purchased bills with me. This purchase bills, when I look into the GST portal, there is a GST portal where there is something called GSTR1, GSTR2A. GSTR1 filed by my supplier, GSTR2A my purchases which happened during a tax period. The total value of purchases where GST is reflecting, that is called T. That is my starting point. So the taxes I have paid during my particular tax period is called T. From that, ITC intended exclusively for the purpose other than business. If I know I'm not going to use it in my business, call that as T1. ITC intended exclusively for exempt supply, call that as T2. Now T1 other than business, T2 exempt supply. So the moment I receive a bill, I know that these goods are used for exempt supply. Example, trading of rice. I buy rice and I sell rice as it is. I call that as T2. Sir, what if I have purchased a rice with GST? I'm selling without a brand. Is there a possibility? Sir, what if I have purchased goods I have manufactured which is sold to some entity which is exempted, like DRDO, ISRO? There's a specific project from DRDO for supplying of a machinery. I buy steel, I buy raw materials, I buy electrical items, all subjected to GST. But these items, when I sell to DRDO, no GST is chargeable. What I will do, I create a project code because it is used for exempt supply. I call all the taxes paid called T2. Then ITC on which credit is restricted under 75 called T3. Example, motor vehicle having less than 13 seating capacity or food catering service, all that is called T3. So what it says, look into your portal. Whatever purchases you have done, that purchases total GST I call as T. From that, identify T1 other than business, identify T2 exempt, identify T3 which is your exempt supply. So it says input tax which is to be credited electronic credit ledger. That means out of my total credit, I derive something called C1. What is that C1? Input tax credit that I can push into my electronic credit ledger. Means I can take my input tax credit. How do I get? From T, eliminate T1, T2, T3. Eliminate all these three portions. That's called your T3. Now further it says, look, there is a purchases which are used taxable or zero rated. At the time when I buy, I know damn sure I'm going to enjoy credit on that particular items, which is called T4. Now, if you feel technical, this is how my rule 42 works, where we need to understand. When the business model is complex, for identifying the input tax credit of common credits, this is a mechanism we need to identify. Now, here further it says, out of your C1, in the previous slide when we saw C1, out of your C1, when you deduct your T4, what is T4? Where 100% I am eligible for credit, I'll be left with something called C2. Now, what is this C2? So this is nothing but common credits. Why is it common credits? Because out of my purchases, I have identified ineligible credits. I have identified other than supply. I have identified your 17.5. I also have excluded where I am eligible. The last bunch is called common credits. Okay. Now coming back, that common credits is called C2. Now if they say, see, out of your purchases, there is an input tax credit which you have taken, which is used towards your this common credit, whatever you're having, that is calculated. C2 is equal to C1 minus T4. Amount of input tax credit attributable to exempt supply. If there is an exempt supply, that exempt supply, how do we calculate? They have given a formula. D1 is equal to E divided by F into C2. Simple terms, mathematical equation. My total supply value, taxable plus exempt. This is the total value. This is my total value. That total value is nothing but numerator is exempt supply, denominator is your total turnover. Now second slide definition we read the total turnover. They are asking to identify your taxable supply, exports, exempt supply, interstate supply. All this put together is my total turnover. That is my denominator. Exempt turnover divided by total turnover into common credits. I am going to get something called D1. This is my mathematical equation. Friends, this is absolutely not a rocket science. I'll take you through this in a stage by stage manner. Now come to our Excel file. Hope you are able to understand this terminology, whatever we have written, T1, T2, T3 and C1, C2. This is something which we have to practice. Come to Excel file. There is an example D. If you come to example D, we will have a clarity how to understand this. Couple of questions have come. Let me just take you through quickly those questions. Tapan says we are not capitalizing the asset. I don't think your accounting provisions permit to you to lay a road which is not capitalized. If you're not capitalized, answer to your question is yes, Tapan. Ambika raised one more question. What if construction of raised floor or installation of a machinery, it is blocked? Is it blocked? Okay. If it is for installation of a machinery, answer to your question, Ambika, it is not blocked, because explanation in section 17.5 clearly says that if it is in relation to plant, apparatus, equipment, then any civil work done for the purpose of giving an effect of permanence to earth, it is not an immovable property, it is plant and machinery. If it is in relation to plant and machinery, any works contract eligible. It is not a works contract, it is rather called as a plant and machinery. So answer to your question, Ambika, it is available. Again, Sapan says, relating to construction of road, we are not capitalizing the road. In that case, whether we can avail ITC. Yes, Sapan, as long as you have not capitalized, answer to your question is yes, we can take input tax credit. Now, coming to our Excel, come to example number D. I just wanted to identify as per this T1, T2, T3. Friends, as you understand, I have said T1 is something which is used in relation to my exempted activity. T2 is something other than business. T2 is something which is used for exempt supply. T3, which is your 17.5. T4, which is eligible. So that identification, let us do one by one. To start with, purchase of raw material for manufacturing of tiles and tubes. Finished products are supplied with payment of tax also to government. Now, at the time of purchase, I know that this is used partly for taxable, partly for exempted. So this is nothing but a common credit. So I would directly push this to T. I'll directly push into T. I'll not do anything with that. Purchase of newer dairy or other stationery for distribution as gift or sample. This is covered under section 17 subsection 5. So I call this as T3. Services procured from manpower contract agency for housekeeping. 16, section 16. Have you used it for business purpose? Answer is yes. I want to upkeep my premises clean, so I'll call that as eligible credit. When I come to section 17.1, there is a list of items which is ineligible. Now, have I used it for exempted? Answer would be, if I have a taxable, if I also have an exempted category, again, I'll call that as a T. I don't know. I may have taxable, I may have exempted. For limited moment, I call that as a T. Gifts and chocolates purchased for the purpose of celebration. Again, covered under section 17, subsection 5. So again, I call that as T3. Services rendered for upkeep and maintenance of street lights to the local municipality. Activities are covered under Article 243 M as per notification 12 of 2017. Consumables procured in this regard. On that, I have paid GST of 92,000. Now, for a moment, I'll explain what is this. Students, you have to have a couple of things back of your memory very strongly. 11 of 2017 deals with your rate of tax. 12 of 2017 for services which is exempted category. The moment I say services exempted, section 247 exempt supply. The moment I say exempt supply, then this particular categorization T1, T2, T3. Because this is used for my exempted category, I call that as T2. Next, new building got constructed from a civil contractor. All the goods as required, cement, steel, bricks, etc. for the construction activity are purchased and supplied for the above construction activity. Now, new building, I will capitalize in my books of accounts. Then 18 lakhs, whatever I have paid, again covered under section 17.5. I call that as T3. Purchase of a lift from Mrs. ATBL for 80 lakhs. Lift used in the hotel business. GST paid for a sum of rupees 14.4 lakhs. Now, there are several High Court judgments, and also there is a classification that lift is a immovable property. Lift cannot be considered as a movable property. Mere movement of that lift operation happens, but it will be structured, it will be fitted to some structure which cannot be moved just like that. So this is again in relation to immovable property. I call that as T3. Purchase of raw material for tool manufacturing tools which are sold on payment of taxes with some export orders. I know that this raw material used only for taxable nature. There is no exempted category. So straight away I'll call that as T4. Now friends, this is one bifurcation. which is relevant for us to understand how my equation of Ineligibility comes into question under section 17, subsection 5. If you feel that this is becoming more technical, please bear with me, because examination, the questions are going to be set in this particular backdrop. If you have to identify what is the eligibility of credits, even post qualification, you don't have a choice. You have to get into this. Again, for the simple reason, for you to understand, I have put into Excel file where you can fill all this information along with me, where you can understand what is eligible, what is not eligible, what is covered under 17.1, 17.3, 17.5. All that you have to go through me with the provisions. Coming back to our presentation. Now, they say further, look, when you have done all these things, I would like to block your input tax credit. How? 17.3, 17.2 clearly says that out of your total business, how much business is comprising of exempt supply, to that extent, I will block your input tax credit. In the previous slide, if you see, we have derived something called D1. D1 is nothing but just a mathematical equation. My exempt turnover divided by total turnover into C2. C2 is nothing but common credits. That is what explained by way of a definition. So what they're saying, you take every month, what is your total turnover for that particular month, for that tax period. What is your exempt supply? What is your taxable supply? Both put together is called as your total turnover. So my denominator is total turnover, numerator is your exempt supply. This I'll apply on my common credits. When I apply, I'll get something called ineligible credits. Now, while doing this, they say there could be a possibility. Your business is not equated. Sir, I purchased raw material, cycle example. I'm into manufacturing of cycles where every month I manufacture 1 lakh cycles. 10,000 is given as free of sample. Is there a condition that my purchases of April have to be consumed in April, that may consumed in September, that may get consumed in December, that may get consumed in May also? Now, pandemic COVID is a classic example for that. Say I have purchased raw material in the month of March. Partially business happened, nothing to worry. April, May, no business happened. My raw material are intact as such. June, July, slowly I have opened my operations. Now what happened? The moment I have purchased raw material, common credits, I have taken 100%. The moment I have taken 100%, when I look for April also I have purchased raw material. But when I look for my turnover, there was no output tax. Since there is no output tax, how do I calculate my common credits? I have purchased raw material for steel, say for 10 tons. This 10 tons which I have purchased, if I have to reverse my input tax credit, when I look into equation E by F, exempt supply 0, my F, that is your total turnover, 0. Why? So there is no sales. Now this particular definition says that look for the previous month during which such value existed. So it says, if you look at the bold and English color highlighted, E by F shall be calculated by taking the value of E and F for the last tax period for which details of such turnover are available. So they are saying that for the current month you don't have a turnover, please look for the previous tax period. Now wherever that turnover is available, please take the turnover. I'll go with the turnover, calculate, find out what is my reversal to be done. So everything is fine till now. I have done whatever you have said. I have identified the common credits, and that common credits I have identified and applied a formula. How, if available for current month. If not available, I have gone to the last month. Everything is fine. Now, further, when we travel, rule 42 says, look, I'll give you something called D2. I'll ask you to do some calculation called D2. So what is this D2? I've done all along with D1. Now, D2 is nothing but ITC attributable to all non-business purpose if common inputs and input services. Like this motorcycle case, if you have something which is not identifiable, then my D2 shall be 5% of C2. C2 is nothing but the common credits what we have identified. That is something which I have to reverse on every month. In addition to D1 what we have done, this D2 is nothing but 5% of your common credits. This is applicable where ITC is attributable to non-business purpose. If I have some common credits which is not identified at the bill accounting stage, So this rule says, please calculate D2, which is nothing but 5% of my C2. What is C2? Common credits. Whatever common credits is there, 5% I presume that it is ineligible. Now, if someone asks, sir, is it not very lucrative to government, and is it not something which is not a benefit? The benefit of the assessee is taken by and large by way of deeming provisions. Law has been framed such a way, and we don't have a choice. Whatever the directions are given, we have to go with the law. Further, now they say, out of the common credits, if you eliminate D1, if you eliminate D2, that is nothing but your credits which you are eligible for input tax credit. Now, this particular C3, once I have calculated, I'll get something called what is a credit I am eligible to take the credit for. Now, this slide, though it is there in the provision, it is not that relevant because practically you're not going to get questions from your examination. Theoretically, this says that when you file returns GSTR 2, when you file GSTR returns 3B, bill to bill, invoice level, you have to do this activity. Now, probably if you see, there is lot of work which goes in this particular ITC quantification. Practically, when you have a business where common credits are there, specific credits are there, your work burden is very, very complicated to do this calculation. Now, having done all that, what further I have to do? Now, this particular slide says that now this is a crux. Once your year gets over, I have asked you to do a mathematical equation month on month. I have asked you to identify how much is the credit available, how much is the credit unavailable. For doing that, there is an equation I have given. For identifying ineligible credit, I have given a simple formula, E divided by F into C2. What is that? Your ineligible credits on a monthly basis. On every month, whatever your turnover, on that you have done. Now, what I will ask you, end of the year, redo the same calculation cumulatively. What is that? Total credits for the month, total credits for the year, T1, T2, T3, T4, C1, C2, D1, D2. The same what I have done month on month, add all 12 months turnover and do the computation. Sir, I have done that. What should I do next? Compare your annual result, compare your monthly results. My aggregate of monthly results, my D1, D2 is ITC which I have reversed. Sir, if I have monthly reversal of D1, D2 which is less than annual reversal, means when I did the annual calculation, I got a formula, I got a result, you have to reverse 100 rupees. But month on month I have reversed which has come to 80 rupees. Now already I have reversed 80 rupees. Now this annual equation says 100 rupees I have to reverse. I have reversed short. So what it says, reverse in GSTR 3B or using DRC3. So what is GSTR 3B? My monthly return. So what is DRC3? This is one challan used for payment of taxes. Demand recovery challan. When we deal with assessment provisions, we will discuss in detail what is your DRC3. Sir, I have done this. Now, is there any time limit for reversal of this? Answer is yes. We'll understand little a while. So what if I have reversed 120 rupees instead of 100 rupees? They say, please avail the input tax credit. If you have reversed more than what you have to reverse, please avail that input tax credit. Now, this particular provision, unfortunately, this says, look, if you have reversed 80 rupees, instead of reversing 100 rupees, that 20 rupees you have to reverse with interest from when? 1st April till the date of reversal. I repeat, if you have reversed 80 rupees, instead of reversing 100 rupees, from 1st April till date of reversal, you have to reverse that input tax along with interest under section 51. So what if I have reversed excess? They say you please avail that input tax credit. What is the time limit? On or before September of the subsequent financial year. So when we are talking this activity for financial year 1920, I do this entire activity for financial year 1920. I have derived and I say, sir, I have reversed 120 instead of reversing 100 rupees. So that excess 20, you can take input tax April till September, whenever you are filing your GST I3B, please avail back that input tax credit. That is what they are talking about, your excess reversal. Excess reversal. So friends, what I have done, again, I can sense your pulse that you're having this over the head. I have taken one example. I will solve this example for your understanding. Open your Excel file. Come to sheet example E. Now, this example E is a practical way how we do on a month-on-month basis. Friends, what you are seeing here is C1. That is nothing but the credit. Out of total credit, I have removed ineligible credit. You have exempted supply, your other than business, your direct eligible. All that I have done and landed up in something called C1. And this is my total turnover for the month from the books of accounts. What also I have done, I've identified some portion which gives us a clarity for computing something called total turnover. So here, if you see column L, my column L, I have brought in something called total turnover based on the given facts. So this I will do revision on the basis of the given information. From the given information, I also calculate something called taxable supply. I also calculate something called exempt supply. So first example, my total turnover reported is 12 lakhs, out of which 2 lakhs is a high C sale. Rest all is your domestic supply with payment of tax. So first and foremost thing, friends, what I will do, this 2 lakh, I'll eliminate from my total turnover for the reason this is a schedule 3 transaction. When I say schedule 3 transaction, neither supply of goods nor supply of services. So it is not a taxable supply. It is not taxable supply. It is neither exempt supply. So for that particular month, my exempt supply is nothing but 10 lakhs. Exempt supply 0, taxable supply 0. This one. Friends, first we will fill this column called total turnover, taxable supply, exempt supply. Then we'll go phase by phase manner. Next. Example number 2. My total turnover for the month is 18,40,000. This includes sale of diesel for rupees 40,000 and rest domestic supply with payment of tax. So when I look into my total turnover, 18,40,000 is my total turnover. Section 247 exempt supply includes non-taxable supply. Sale of petrol and diesel, non-taxable supply. So for total turnover should be included. When you talk about taxable supply, out of 1840, there is a turnover of 40,000 which is not taxable. So my total taxable turnover is 18 lakhs. So when I say total taxable turnover is 18 lakhs, my exempt supply is nothing but this minus this. Please follow with me carefully. Any point in time you have doubts, please raise the doubts in chat box so that I can respond back the interpretation. I can respond back to your queries instantly. Hope you are able to see my screen. First example, first line, I said 10 lakhs is my total value and taxable value is 10 lakhs. Second example, I said out of 18,40,000, 40,000 is exempted. So I have filled 40,000. My taxable supply happens to be 18 lakhs. This is how I did the bifurcation for my example number 2. Example number 3. My total turnover is 36,20,000. Include zero rated supply for 12,50,000 and rest is domestic supply with payment of tax. Now, section 16 says your zero rated supply is as good as your taxable supply. So there is no exempt supply during the month. I call entire amount as taxable. The moment I call exempt this as taxable supply, my entire turnover is taxable supply. So by virtue of that, my exempt supply is 0. My exempt supply is 0. During July month, there is no transaction. So zero rated is in, taxable supply is 0. Total turnover is also 0. Similarly, for the month of August, there is no transactions, 0 taxable, 0 exempted. For the month of September, I got to know total turnover 28 lakhs, of which transport services for 50,000, GST is payable by the recipient. Now, section 247 not exempt supply, 17.3 only for that purpose, this is the exempt supply. So 50,000 friends, I'll put under the column called exempt supply. So out of entire thing, 50,000, I'm calling as an exempt supply. The moment I put that as exempt supply, my taxable turnover is total turnover minus exempt supply, that is 27,85,000. This is my taxable supply. Let me just freeze the headings so that you can see the headings. Yeah. Next point. My example, October month. All goods supplied to SSI developer, goods are nil rated tax as per notification. Now, whatever 16 lakhs we are seeing in the month of October, entire 16 lakhs are nothing but nil rated supply. The moment I say nil rated supply, section 247 exempt supply, answer is yes. But when I come to my section 17.3, because it is a zero rated supply, I put that under the category called taxable supply. So my exempt supply will be zero for that particular month. Next, December month, domestic supplies with payment of tax. Whatever is there is called domestic supply. So my taxable supply is entire amount taxable. By virtue of that, exempt supply is zero. Again, January, I have zero taxable supply turnover, zero. February, zero. March, goods supplied to ISRO for 2 lakhs and no GST is applicable, and rest domestic supply. So out of 12 lakhs, 2 lakhs is supplied to ISRO where there is tax zero rate coming under 247. The moment it comes under 247, it will also come under my exempt supply. So the value of exempt supply during March is 2 lakh. Once I say 2 lakhs is my exempt supply, my taxable supply is total turnover minus this one, taxable turnover. So friends, what I've done, I just calculated my exempt turnover on a monthly basis. So for the month of May, 40,000. For the month of September, 50,000. For the month of March, 2 lakhs. This is my exempt turnover from the example E. Let me quickly see if there are any further questions. Excel is not visible. Dilip, Ambika and Ravi. PPT not seen. I think Excel is visible. Can you just confirm? Can you see my Excel? Whatever I have done till now, are you able to see my Excel file? Please let me know. Can you see this turnover of 2,90,000 in column J? In column J, I have updated, month on month. May 40,000, September 50,000, and March 2 lakh. Can you confirm? Are you able to see my Excel file? I've updated the value of 2,90,000. Column K, 1 crore 30 lakhs. Column L, 1 crore 33 lakhs. Once you confirm you're clear till now, I'll go further. Please let me know. Are you clear till now? Please let me know. Are you clear till now? Okay. Whatever we have done for computation, are you clear? Ravi says it is visible. Thanks for confirming, Ravi. Hope there are no doubts in this example E till now. Okay. Now I'll go one step further. Please do it with me. See, why I have picked up Excel. This is easy. This is convenient for you to solve. Practically, when you do on the paper, it will be little time consuming, but you will learn properly. Now, column E, I've already updated a formula. What I did, my exempt supply divided by F. F is nothing but column J, column L. I have considered numerator of E. I have considered denominator of L. I have just used a formula called if error. Numerator divided by denominator as a terms of percentage. So I get in the month of May 2.17%, in the month of September 1.76%, in the month of March 16.67%. This is just the percentage what I have calculated in column M. Hope you are clear till now. Ambika says clear till now. Thanks for your confirmation, Ambika. Now I'll go one step further from here. Rule 42 says Do your T1, T2, T3. We have done in example D. After that, eliminate from the total turnover T1, T2, T3. You will get C1. From that C1, eliminate T4, which is eligible credit. So I have done that. Finally, we landed up in something called C2. Now, this example, I'll change slightly this as C2 for convenience of understanding. Assuming that this is my C2, where entire credit is eligible for me. Now, I have done C2. I have also done E by F. So friends, for finding out D1, hope you can see my screen. For finding out D1, what I have to do? E by F into C2. I have to do each headwise. So what I am doing for CGST, whatever my CGST is there, that multiplied by my E by F I have done. My formula for D1 is E by F into C2. So what I did? Column M into column G. So here I am just going to freeze my column M. My M6 should remain constant. So I have just frozen. Again, my row number 6 should not be constant. My column M alone should be constant. I'm just using an Excel function. I've just said that and I've applied the formula. Now just see here. My H6 into M6, my I6 into M6. This is what I have done. I'll just copy this formula here and check whether it's functioning. When I press F2, look, the formula I have updated. G column G7 into M7. This is just Excel formula, nothing I'm doing. So I'm just copying the formulas here. You can also do along with me so that you will get the answers. You can also do along with me. You can check whether answers what you're getting is right or wrong. Now, I think this should be a percentage. What I'll do? Here I'll apply divide by 100, 2.17 by 100. So when I apply that, I'll get the formula. I think now we have got the formula. If I look for the month of May, I have taken 16,000 credit. I got 2.17%, which is ineligible. So my D1 is nothing but 16,000 into 2.17%. For a moment, I'll just type that formula here to cross check whether we are right or wrong. 16,000 into 2.17 divided by 100. I'm getting 347. So yes, our formula is right. Rounded off formula. So if I do this formula, I'm getting D1. Friends, look, I'm doing this on a monthly basis. If you look the formula, what I've done, every month I'm doing. If you look the formula, every month I'm doing. Now this is what Rule 42 says, do it every month. End of the year. Now look, I'm just putting the total, sum total in the column, row number 17. In the row number 17, I just put the total. I think subtotals are available here. Same thing I'm just putting in row number 17. Just let me check my question window if there are any questions till now. Vivek J's Zoom Excel 130%, then it will be easy to understand. Sure, Vivek, I'll definitely do that. I'll do that. Yeah. Yes, Vivek, I did that. Till now, whatever we have discussed, please let me know if you are having any doubts. I'm just doing a mathematical equation, not beyond that anything. Okay, no questions till now. I'll go further. So friends, what I've done, I did step 1, I calculated exempt supply. Step 2, I've calculated total turnover. Step 3, I calculated taxable supply. So first stage, exempt supply, taxable supply, total supply. All this we did. And in the process of doing that, if there is any schedule 3 items, I've excluded schedule 3 items. Next, what I've done, I have applied something called formula E by F. This is also clear. Next, what I have done, my month on month purchases, ITC, what is there, that I have, on that I have applied something called E by F. So here I got month on month credit, what I have to reverse. Now, what I am doing, end of the year, they expect me to do the same thing on a consolidated basis. They expect me to do the same thing on a consolidated basis. So what I'm doing here, I'm just copying this formula here. Now what I did, my total turnover 2,90,000 divided by L. I got a percentage. So what I am doing here, I'm just copying that formula here. Look here. For the total, what I have done, whatever credit is there, I'll just show you the formula. My total CGST for the year is 89,400. My total CGST for the year is 89,400. On that, I have calculated my percentage called 2.17%. How much I got? 1,940. Now, I'll put in English to make you clear. Monthly aggregate. I'll show you the formula here. I've put subtotal formula. My monthly aggregate, I'm just linking this. Sorry friends, I not kept on resume. My Excel was on hold. I hope you can see my screen now. I'll just repeat what I have done. I have did the total for the entire year called CGST total, SGST total, IGST total. All the input tax, I did the total. Similarly, I did the total of exempt supply, I did the total of taxable supply, I did the total of my total sales. Till now, everything was totals. I didn't do anything. Now, I did this formula called E by F. What is E by F? My exempt supply divided by total turnover. My exempt supply divided by total turnover. I got 2.17. Now what I did, this thing I applied on my monthly total. I applied on 89,400. My entire credit during the year is 89,400. So when I apply, this is my annual ITC ineligible. So here what I'm doing, my monthly aggregate, already I have put a formula. I'm calling this as monthly aggregate. And I'm doing something called annual D3. So my annual D3 is 1940, 2456, 2456. So friends, what happened here? Check. Instead of reversing 1940, I have reversed 7,892. Excess reversal. Instead of reversing 2,456, I have reversed 348. Short reversal. Even this for, I think, let me change my headings. Heading should be CGST. Okay, this should be IGST. This should be CGST, because credits should be same. So let me just change the headings. Yeah. We give the color coding. Yes, friends. So now you can see here. When I did this annual comparison, my IGST, I have excess reversed. My CGST, SGST, short reversed. So what does Rule 42 say? Avail the credit. Pay with interest. This is what my Rule 42 computation, all what we have to discuss. So whatever I have done till now, this is the computation under Rule 42. So I think we have come to the end of time which was permitted as of today. Friends, what I'll do, Rule 42, this is the example, whatever theory what we have in our section 17.5 read with Rule 42. There is only one problem in relation to capital goods which is covered in Rule 43. Tomorrow I'll start with Rule 43. I'll start with Rule 43, ITC reversal in relation to capital goods. Then we will go further in relation to Section 18 and then other job work provisions. So coming session, what we are going to have, we will have recap of all these things and my Rule 43. Meanwhile, I suggest any of you have any doubts, or once you get into this practice, please come back with your queries. And after this session also, there is a feedback session. You can put your feedback on the thing. Also, any of your queries are there which probably was not posted or you were not clarified, please post into the question window. I'll take a stock of all those unanswered questions, and the next session I'll clarify all these particular questions. So we'll stop our discussion for today. Thank you and good night.